doing a really good job. They have a really cool product. That token goes up and down so much on a daily basis, so that people are constantly losing their mind. And it's probably the same 10 people selling over and over again. Ultimately, like it is what it is.
So this movement away from the wild west in crypto, and with the SEC coming out providing more clarity, how is that affecting street or not street? How is that affecting Soar specifically? And like how are you guys positioning yourselves now?
Yeah, so the main thing for us is just constantly getting more clarity on our models and updating them to fall within guidelines, right? So we've been dealing with law firms, and we're dealing with, like I said, we have some conversations ongoing with some people in the administration, et cetera. And it's really just making sure that we're very rigid about how we apply our rules, how we apply our model, and making sure that it's legal. I'm an attorney. I'm not risking my bar license on this, trying not to. And we want to make sure that people are getting value in tokens, but we have to do that under the guidelines of the law. I'm a U.S. citizen. Our whole team's U.S.
I want to actually walk it back and talk about the type of capital on chain. Obviously, this kind of changes with the market, like you said, in a bull market that changes. Do you think I think we even saw this with MetaDAO a while. A few of their tokens were going up for a period of time, like a VG, Umbra, and then I think the tune changed for everyone on chain, and like not everyone on chain, but everyone trading those MetaDAO tokens, and they all became kind of holders rather than traders, I guess you could say. Do you think if Soar maybe had a few tokens that just trended up for a couple of weeks or months, people would start trading them a little different?
I would say yes, short term. My concern is you've still seen with MetaDAO, you've seen with everything pretty much, right? Even Kled, which I was really surprised about, because Kled is, a great product, obviously a beast. Really interested because of how much the token has ranged up on speculation. And then as things kind of got clearer, Street came closer, ERCS came closer, things kind of ranged back down, right? So it's like, I think no matter what you do, there's just not enough capital in the market right now that's speculating on things. And like I said, the majority of the people who are speculating are just looking for a short-term trade. They're not looking for a long-term thesis. It gives you a better base, the few people that hold, but I think no matter what you do right now, you have to bring in outside capital. You have to bring in people listen, when you're an angel investor, you're a seed investor, you're looking at 3, 5, 7-year timelines, right? In crypto, we trade on 2-hour charts, 4-hour charts. We're not looking to hold things long-term, and that's just kind of how we are and how we've been treated. And we've watched tokens go down over and over again. You have to bring in outside capital. I think that's the only way you can do it. That's what we're looking at. I think that's what Street's looking at. It's the right way to do it. You need distribution.
How do you guys do that?
So it's a long process. I think the main thing for us, we've been pretty quiet, admittedly, but it's been really building out better systems in terms of how you trade these assets. I think that one thing we've noticed a lot is that AMMs aren't really super favorable for tokens. I do think that there's better trading styles, and order books are a lot more favorable in some regards. And the second thing is just bringing on distribution, getting things that retail are interested in. They're not going to be the Web3 products. They're going to be a lot of Web2 stuff that they're familiar with. So getting things that people are familiar with, assets that people do want to trade, and then eventually you kind of back into the more Web3 native stuff. And that's kind of our direction right now, is focusing more on the Web2, whether it's tokenized equities of startups that have already raised capital, and a bunch of different options that way.
Are you guys kind of taking a reset period here while the market's kind of quiet, and I think people are evaluating what's going to run, what's going to maybe not work, and what's going to work and what's not going to work in this market?
So we're still doing everything day to day that we would do, 3 or 4 months ago. I think the most important thing is that when we set out to build Soar, we had a very clear vision in our mind of what was going to happen. Unfortunately, we got caught up in trying to get launches out, trying to get all these teams organized, and going and finding good teams to launch, which I think we did find some really great teams to launch. That got in the way of product building. I'm a product guy by nature, by trade. We wanted to go back and look at our product and say, is this what we set out to build when we started? And now we're getting back to that. So I think the new V2 of Soar is going to be a completely revamped product with a lot of the things that we always wanted to do. We always talked about, the retail side of things, right? The distribution side of things. We had to figure out a way to tackle that. And to be honest with you, it's not going to be through ICOs. It's definitely not going to be through bonding curve launches. It's going to be through a bunch of different assets that people can trade, speculate on, and that appeal to the broader, like I said, retail. My Web2 friends would want to trade it as opposed to crypto people.
And how are you guys tapping into that market? I know you have this app you're rolling out. You had a really interesting go-to-market with that, offering maybe free shares in these companies or whatever you can legally classify that as. So what's your approach there? Or what's going to be your approach there? When can we expect that?
Yeah, so go-to-market, we have a huge plan written out for it. Launch videos and such. In terms of time frame, probably 4 to 6 weeks, I think is kind of our broad time frame right now. We've been doing a lot of work, like I said, on product, on figuring out a better way to offer these things, and also really just going to more Web2 funds. I think we got caught up, and this is another thing that broadly, and I think Maya had talked about this previously, but the reality is that there's infinite capital in private markets. If you're a great company, you can go raise private capital, right? I think that those offerings whereby someone has already invested in these companies and we can bring them to Web3 and offer them to our users here is a lot more compelling right now. I do think there's a world for the early stage stuff, the pre-seed stuff, the product launches stuff and AI stuff. But Right now, we're really focused on quality assets, and quality assets, as defined by us, is going to be things that are, like I said, they already have backing, they already have market share, they're not pre-launched. I don't want people to be feeling like we're just throwing stuff up on a page and saying, hey, listen, this might work, it might not. I'd rather people have traction, have revenue, have a product, and have backing, and we're just giving people access to startups truly, as opposed to pre-seed stuff that is not even really a business yet.
Is this just a timing thing? Because I think you said it correctly. You know, when I say is it a timing thing, you see oil, gold, silver, stocks that trade 24/5, I guess you could say, on the traditional market, are now coming over to hyper liquid and getting like incredible amounts of volume, billions of dollars of volume. And traditional finance is picking up on this quickly, right? The NYSE is moving in this direction, the Nasdaq's moving in this direction. Like everyone really wants a piece of this. I think they see the value in tokenized rails that's offering. So is this going to have to come to traditional markets before it flows down to private markets a little more, or how do you foresee this on a timing aspect?
Well, let me put it to you this way. We've done a lot of soul searching in the past couple of months and trying to understand exactly what this would look like, right? And I've talked to a lot of people. I think a lot of our competitors have done so as well. And when you go look at even things like Hive and Equities and those type of projects, right, Forge, they're all pre-IPO stuff, right? Even those markets struggle to actually get the super high quality private assets. A lot of VCs, the higher end ones, the great products, they don't care to actually sell secondaries before they actually just IPO, right? And so what you see is these same markets that they're very tapped into TradFi. A couple of them are invested by the NASDAQ, et cetera. They're still struggling to get the best assets, right? And we've always talked about like the adverse selection problem. The adverse selection problem is extremely real. And I don't think that it's going to be solved anytime soon. When you have this much capital in private markets, you can get capital anywhere. You don't need to tokenize. You don't need to do this or that. You don't need to sell secondaries, right? How do you fix that? Ultimately, it comes down to distribution, right? You have to offer them something more than just tokenizing their product and putting it on rails, because a lot of people don't want a live tracker of how their product is doing or how their business is doing, right? We've seen it with tokens for a long time. It's really hard when you come out, launch a token, and then your token's trending down. It ends up affecting the tail end of your business, right? People start looking at you less favorably, judging you, you have a bunch of FUD, et cetera. So I think that you have to go about it in a completely different way, which is bring assets, I would say in a lot of ways, even without their permission, ideally, on chain, get them all trading so that people have to deal with that no matter what. And then you can start tokenizing stuff. So we really thought about it from like the backwards way of how do we get every asset on chain? And then eventually we can go and ask for permission, right? We don't want to ask for permission right now because it's just too difficult. Good companies don't want to do it.
So how do you get these assets on chain? Is it going on the cap table, acquiring them, putting in an SPV, and then allowing people to trade that SPV's value? Or
yeah, so we're looking at it heavily from a secondaries perspective. You're seeing founders that are super young, 18, 20 years old, raising their first rounds, right? Don't have a lot of money to their name. They want to be able to cash out a little bit of the value of their company. So attacking them, attacking employees, founding employees, et cetera, is one way that we're heavily thinking about that and talking to funds. There's a lot of seed funds we've realized that just through talking to people, their whole business model is they invest early on in companies. And then they actually, before there's an IPO, an exit, et cetera, they usually sell all the secondaries to different funds, right? So attacking those funds where they don't care where that equity ends up going, they can tokenize it, whatever we do with it, we're the buyer of it, we own it. So tokenizing through secondaries is one thing we're looking at a lot.
Now, what about the Clarity Act? We had a question in the chat. I thought it was a really good one by Crypto Jones. He asked, any takeaways from the Clarity Act? I mean, how are we supposed to be thinking about it? Is there anything we should be watching out for?
Yeah, I mean, I think obviously the biggest thing right now you're seeing with the banks, right? It's a completely controlled environment, unfortunately. Lobbyists are the worst. There's nothing new there. I think that it's a big signal for risk on in the markets. I wouldn't go as far as saying that it'll have a lot of effect on tokenized equities, anything in the RWA sector in my book. But I do think it's a big risk on event for getting legislation passed for crypto, for people to start reinvesting in this market and realizing that there is a real path to crypto being integrated into day-to-day life, which we've been waiting for 10 years, at least on my side. But yeah, I think everyone keeps getting confused with the idea that Clarity is actually going to affect what we're talking about with like securities, right? And they're not really related, to be honest with you.
Gotcha.
Yeah, I mean, and it also like that, I feel like that's much more regarding like stable coins. I mean, we're seeing a lot like Circle just got affected. I think they're down 13% today off of the Clarity Act.
Slaughtered. Yeah.
Getting slaughtered. So maybe it's not quite in your ballpark. Joe, if you have a follow on to that, I'll let you go.
Yeah, I just feel like we've been waiting, like you said, 10 years for like crypto to go mainstream, to get some type of clarity from the SEC, to gain adoption, and now all of those things seem to be happening. The banks are TradFi, maybe not the banks, but TradFi is definitely coming in. Maybe the banks are too in their own way, but we see a lot of these large institutions are adopting at least the rails. And I saw a tweet the other day that said people don't realize that tokenization is crypto's use case. Everything else is dead. Like, what do you think? That's what I was going to ask you. I'm like, what do you think about that? I mean, are they really just going to use crypto rails and just leave everything behind? Is that really, what crypto will be adopted? And is that why we aren't really seeing anything happen from a price action standpoint?
Well, I'll say this much. I always thought that, and I don't think people paid attention enough at the time. When Tempo launched, right? This was a big Web2 company, Stripe, et cetera. I think Paradigm is very deeply correlated with it. That was a big signal to me that Web2 is not going to come here and play our Web3 games. They're not going to kind of buy into the stuff that we've been selling for a long time, right? They didn't use Ethereum. They didn't go to Solana. They've just built their own chain, EVM. But other than that, that's all they did. I think that was the big moment for me where it's like, okay, we have to build things that TradFi, that Web2 would use. I believe that tokenization is probably the biggest value add use case. I mean, private venture, something like it's a couple $1 trillion market year on year. I think there's somewhere between 10 and $15 trillion in assets that are all highly illiquid. I think that tokenization will unlock a ton of that value just in the private venture markets. But no, there's other use cases for crypto. I don't buy into that story. But I do think that it's going to be a situation whereby we either adopt how Web2 works. That's why I've always talked about like equity is something that I don't think you're ever going to get rid of. I don't think that we're going to go away from traditional fundraising. The idea of a seed, Series A, Series B, et cetera, might more look like an ICO over time. But I think that we have to adopt how Web2 works if we want them to come use our stuff. Trying to, be Vitalik and have this decentralization in mind all the time cost them tempo. It'll cost them more business in the future. It's all about speed and efficiency when it comes to TradFi. And like I said, if you want to break those molds, you can do so. I just don't think it's going to benefit you when you're trying to integrate with how the real world works.
So do you envision the future? Like I've always envisioned the future as being like two like economies running in parallel, right? You have everything decentralized, everything on chain. And there's going to be sort of this, I guess you could say, duplicate of some sort, but the crypto version of whatever TradFi has. So, they have exchanges, we have dexes, right? And like, and it's going to be this pair of these two worlds that run in parallel. But from what you're saying, it's like, well, TradFi is just going to come, use all this stuff, use all the technology, build on the rails, and then they're going to say, hey, we have the capital. So you either come and play with us or you're kind of left on your own. Is that how you see the future kind of being?
That's the unfortunate reality of how I say it. Yeah. I think that there's just way too much evidence of, the Black Rocks and co coming in, taking stuff and then building it how they see it. They control so much capital. Everyone's dying to work with them in crypto ultimately, right? So whoever's going to sell out to them first is going to be the one that gets the cake. I hate to say it, but that's just the reality. I think that there'll be a world where decentralized stuff does well, but I think it'll probably, I'm not a privacy maxi, but I think it'll more than likely be based on privacy and just the overall idea that you control your own fate in terms of your capital. And then I think you're going to see a lot of tempos whereby they're hardly decentralized products. And that's where most of the TradFi stuff runs, because decentralization and efficiency are two things that contradict each other, right? Like you can have a decentralized network, it's a lot slower, it's a lot less efficient, or you can have something that's run on like a mega ETH where it's just run on one sequencer on basically a server, and it's extremely fast. It operates like TradFi, and you just can't really merge those worlds too much. No one's really been able to do it too well. I guess Solana's done a good job, but I think that, like I said, I think those worlds just don't ever collide, unfortunately.
I've always been fascinated with how this was going to play out because you're right. Like decentralization, it does cost efficiency. Just we see that with Bitcoin, and that's why ETH became a thing, and we saw that with ETH, and that's why Solana became a thing, and so on and so forth. But as you go down as you go down that road, you get more and more sort of like centralized. Even Solana has like a sort of like centralization problem, or at least
But it's also like the best chain to trade on. So it's like, when you go to Bitcoin, like go mint some ordinals. Good luck. You want to shoot yourself.
Spend $250.
Spend $250 and wait 50 minutes for your transaction to confirm. And then on top of it, you actually minted out and you actually just lost all the Bitcoin you sent. So no, it's a really interesting question. And I think that the hard part is that we lose a lot of our soul as kind of crypto native people when we realize that we start building stuff for Web 2, right? I think it's not super enticing for a lot of the people that built the world that we live in today. But at the same time, it's like, I'd rather see Web3 and crypto native people win, building really cool products, just realizing that the real world is never going to change, right? Like I've always said, like the idea that we're going to get rid of like the topic of equity, which I've seen some people talk about. I think even Pasternak actually mentioned that a couple of times, like the idea of equity being gone, right? Equity is how the entire world runs. Like it's been around since I think the 1200s and even before that in like Roman times. It's never going to change. And that's fine. Equity works really well. And like, we don't need to fix things that aren't broken, right? Web 2, I've talked to a lot of VCs, I've talked to a lot of funds, I've talked to a lot of investors. No one ever complains about equity structures not working, preferred shares and all that stuff. All that stuff works great. Like it works perfectly fine. We just need to adopt that and adapt it for Web 3 through tokenization and enable people to get better access to good assets. We don't need to completely rewrite the rules.
Well, and that's what's happening, right? We're seeing the flaws in the traditional system get ironed out, like the confines of a market, being open 5 days a week and during market hours. That's going to probably be gone within the next couple of years.
Oh, absolutely. I think
it's
crazy, man. I mean, you gotta give them credit for getting, the S&P to sign on.
It's incredible. I think every founder, especially someone that's doing something like yourself, should be looking at Hyperliquid. And the clear answer coming from that should be, okay, wait a minute. traders will trade something on a different platform if they can't trade anywhere else. Like,
oh, absolutely,
get access to it, they will do it. I think that's why I really like your approach here, where it's like, okay, let's go find the assets that people want to trade first, and then offer those on our platform, because the opposite way is not really working. Yeah.
I've also had a realization too on that topic that, like you see the guy talking about like trading oil futures, right? Like none of us know anything about oil. Like, let's all be honest with ourselves. Like, not one of us know one single thing about crude oil. You can speculate and be like, oh, they're blowing up oil fields, like we should long oil. But like, there's a lot more to the oil trade than just doing that. But people will literally trade anything. Like I read a whole study about poly market and like weather trading, right? And people are getting really good at like recognizing whatever his patterns, I don't know, about trading weather. And people just want to trade anything at this point. So the idea that it's really funny, we've went from like prediction markets where people trade like the general stuff, sports, etc. We went to crude oil, we went to the S&P all the time and the NASDAQ all the time. And then we kind of like jumped over the $10 trillion private venture market that people trade and spend billions of dollars investing in. And we went to weather and all this other derivative shit. So I think the funny thing is like we've shown that people will just trade anything. The ICM theory has always been that people want to trade good companies and trade quality assets, right? And speculate like they're a true investor in these companies. We just need to figure out a way to get those assets on chain in bulk. And that's kind of the idea of kind of how we're attacking it from SOAR, is how do we get a ton of these assets that people talk about day to day? We see pre-IPO stuff doing really well, but there's still 99% of the other market that no one has touched, no one can speculate on. How do we bring all of that stuff on chain?
How do you do it?
So the long process I'm not going to disclose today, but it's a mix of secondaries and using some new technologies that we're speaking to like Robin Hanson and co. So guys at G, kind of looking at a bunch of different options for bringing this stuff on chain. Like I said, and it's going to be a mix of secondaries is the big kind of golden goose. We talked to a lot of funds, talked to some founders as well. I think that's like the most obvious vertical. And I'm sure like on Maya's side, like that's probably something he's also looking to attack, to be honest with you. And he should. Very bullish on the idea that secondaries is something that is highly liquid, but also super good for founders. You see these founders, like, I think it's like, was it DraftKings? I believe it was DraftKings. The guys literally like sold their company for $440 million. They did not make one single dollar. They paid back all of their investors. They never took secondaries because back in the day it wasn't allowed, and they walked away with nothing, right? So you built a $400 million company and lost money. So I think that's really healthy for people within reason to sell some of their equity as their company appreciates. I think that tokenization is one great way to do that. And what it also does is it enables you to separate the idea of like managing and running a token. You just have the ability for people to get access to your company, but you're not managing it. You're not interacting with those people. It's no different than just going on like a pre-IPO. Like if you're on Hive, you're not like day-to-day managing your investors, right? You're just putting up your equity there and then you're walking away and running your business. So I think that's where we have to get to, right? Like you don't need to manage a token all the time if we're just trying to get people good exposure to great assets.
Right. And again, like think about oil. It's getting all this trading volume. There's no one here to comment on oil and give updates on it. Like people are just finding their own reasons to trade it, right?
People just want to gamble, man. Like that's kind of like the unfortunate reality is people just want to take shots on random stuff.
And so this has always been pretty obvious to me. Like the best people positioned to bring these markets on chain are, these big funds. And I think of something like A16Z, like why don't they do this? Because there's so much secondary trading volume that they would benefit from offering all of the companies A16Z invests into to the public. And, the people want that exposure, right? A16Z is looked at like the golden standard of good investments and early stage venture, right? Like why don't they do something like that?
Because the entire system runs off of not doing that, right? When you're a fund like A16Z or any large venture fund, especially early stage, your whole goal is to mark up your investments and walk away net positive, right? And most importantly, what these funds do a lot of times is they invest early, rounds get marked up, they raise new rounds, Series A, Series B, whatever it is. They're then going and raising their next fund, right? And when they raise on their next fund, they're not saying, hey, listen, we have the cash in the bank. They're just saying that our portfolio based on the current numbers is we're up, 300% on this investment or whatever it is. So the entire model actually fights against that. That's why we haven't seen anyone even talk about doing it, because they don't want this stuff to be liquid. They don't want people actually being able to trade it back and forth because it'll kill the value and the premium that they get. And it's the same thing with like why founders, we talked to a lot of founders, right? Why they don't want to have a tokenized quote unquote asset of theirs trading, because they're like, well, what if I go raise another round and my token's at 10 million, I'm trying to raise in a $40 million round, right? It blocks them, at least mentally, from raising that next round. It's a tough problem to solve, man. We just have to break through. Like I said, you have to get distribution, and you're gonna have to start with not the best assets. Like I said, I think Kled and Oregon, some of the other cool stuff. CPT, I think, is another one. Really cool stuff that should not be tokenized, but we got the opportunity to trade this stuff, and that will expand slowly until the point where it's kind of like a jailbreak, and people want to tokenize. They want to use the liquidity early on, but I think we're still a pretty long ways away from getting to that final end.
They they look up to some twit instead of looking up to Thomas Jefferson or looking up to Nikola Tesla or looking up to Magellan. I mean, kids, Magellan's a lot cooler than Justin Bieber. He circumnavigated with one ship the entire planet. He was killed by wild natives before they got back to Portugal. And when they got back, there was only...
But why? $22 million in 3 fucking hours! There is no nobility in poverty. I have been a rich man and I have been a poor man, and I choose rich every fucking time. The real question is this: was all this legal? Absolutely fucking not. He would neither go towards the feeding grounds at the edge of the ice, nor return to the colony. Shortly afterwards, we saw him heading straight towards the mountains, some 70 kilometers away. Dr. Ainley explained that even if he caught him and brought him back to the colony, he would immediately head right back for the mountains. But why?
What's your dream?
To go away.
To go away. That's great.
Do you guys want to drink? I don't understand why everybody has to be so judgmental. I understand why mom's judgmental. I think it's because she cares, partially. I think it's also partially because everyone else is looking at her like, hey, Cody's just a bum. Cody's this, Cody's that, Cody's this. Cody's me, bro. Let me be me.
GMCG, welcome back everyone on this Wednesday.
GM, what's good, y'all? What's up? Hope you guys are doing well.
Doing good.
Yeah, man. How's it going, Josh? How you doing? It's a good Wednesday. Good Wednesday.
Yeah,
here.
Good Wednesday. Saw a little green candles on Bitcoin and stuff like that, so kind of feeling kind of nice. But
yeah,
100%. Get into it.
100%.
Some big updates from different people. Clarity Act being voted upon. Yeah, a lot going on.
It's a lot going on. So let's jump right into it, guys. First off, let's talk a little bit about the near-term outlook for Onchain. And again, we start high level, right? We start, news, because it helps give us market context. So let's start off with this tweet and let's analyze this real quick. This tweet comes from the homie Kaizen, another guy on the Chad's list. Again, if you follow me at ChillTRD, you go to my profile, you go to view lists, you go to Chad's, you'll find this guy on the list. Here's what he says about the outlook macro wise. He calls for a ceasefire in April. The Strait of Hormuz opens. Trump declares a victory. The talks continue. But then as we go into May, we get re-escalation. The Strait of Hormuz closes again. It escalates even further to threats of nukes, and that affects the market. There's a ground invasion. China hints to invade Taiwan. That's going to be like a big black swan styled event. North Korea test their missiles, which furthers the threat of war, and that's when you get the mega nuke for Bitcoin dropping below 50K. Everything resolves by Q3, Q4, and war ends, midterms, elections, bull run starts. So what he's calling for essentially is a window of risk on, a window of time where essentially the market reverses on what's perceived to be good news, but then obviously, Trump, the KOL of 2026, he reverses on everything via tweets, via actions, and that escalates, and that causes the reversal. So I guess that's kind of where we start. So we have to kind of talk a little bit about, okay, is there going to be a ceasefire? Like, obviously, we're not macroeconomic experts. We're not experts when it comes to this stuff with war and all of that. But we do have more information available to us than many people. So what I'd like to do here is just take a look at the Kobisi letter, and let's look at the information that we have on hand. So first, the 1-month ceasefire situation. Israeli media is now reporting that the U.S. envoy Witkoff and Kushner are preparing for a 1-month ceasefire with Iran. This ceasefire will be utilized to hold talks as the war nears the end of its 4th week. But will Iran accept? It has become increasingly clear that Iran's primary source of leverage in this war is their ability to dictate the narrative in capital markets. If a ceasefire is announced, driving treasury yields and oil prices lower, Iran loses a significant portion of their bargaining power. This points to further rejection of peace talks by Iran. However, it is now clear that there is a lot happening behind the scenes, and the war appears to be closer to its end than its beginning. We expect immense volatility ahead. Okay. So is there going to be a ceasefire? Potentially. Potentially that could be on the table. Would a ceasefire be bullish for markets? Probably, because that means, right, return to some sense of normalcy, at least getting there. There's going to be this perceived idea of peace ahead. I'm curious, Josh, on your take on this. I know you had a take on oil, on treasury yields the other day. Does this affect your thesis there?
I agree with what this is saying. I disagree with the other tweet you showed. I think that is like a super Max Payne scenario, but I'm more aligned with the Koblisi letter that they're going to try and sort it out. But they're very far apart. Like, Iran's asking for stuff that I don't think the US would be ever willing to give. So I think, yeah, there's no answer here. That's the thing. The answer is that there is no answer.
Right.
I think this is more likely the 1-month ceasefire situation. The doomers are going to say, go to the other tweet. It just sparks an all-out global war. And I just don't see that to be the case.
Yeah, I'm with you, actually. Now, I want to say this. Currently putting on chapstick. I want to say this. This tweet here, I think it does resemble, or I should say, it does align with the overall market thesis around how this year goes, how 2026 goes, right? Everyone's looking for a Q3, Q4 bottom. If you've been watching our streams, you know that on my Bitcoin chart, on the 2-week, you know that I have a summer bottom.
Can we pull that?
On this? Yeah, pulling that up right now for you, actually.
Because let's overlay this. Yeah, this is, yes.
So let's run through it. So if you've been watching watching these streams, you know that overall this is the summer bottom has been the thesis since like late January or so. And we've been kind of looking for signs, looking for evidence that point us toward a summer bottom. But here's where I think this comes in. I think the first part of this is actually kind of, I kind of like this, right? Ceasefire in April, Strait of Hormuz opens, Trump declares victory. They look like they're headed toward peace. perhaps there's some re-escalation. All I know, there's going to be volatility in the decision-making process. We've seen Trump literally say two opposing things. The war is won. The war is going to continue for a while, right? We know that from an information perspective, things are going to be volatile. So we don't know exactly how. I don't think anyone can really predict how these things will go. But I do think there's going to be a time of where things are looking like they're headed in a peaceful direction. And then all of a sudden that'll flip. And that will affect the price action. So, if it looks like they're looking for a month of a month of ceasefire, perhaps we're looking at some sort of bullish price action in the near term. So let's go down a little bit to some lower time frames to really talk about this and analyze this. I've told you guys yesterday on stream, or perhaps Monday, I believe it was yesterday though, that I'm okay with a move to 80K at the highest, right? That might not go completely in line with what we have mapped out on the 2-week. But I'm not here to, map out exact price action. I'm just trying to see, when are we going to bottom? And in this case, it looks like if there is some sort of bullish momentum, we can actually see a trip to 80K at most, which I told you guys about the tweet that I shared. There's a generational short loading, and at 80K, I will be shorting. I promise you. That is literally a setup I'll throw size at, right? So that's the whole setup here. We have potential peace on the horizon, or perceived peace on the horizon. We could see some volatility in that decision-making process. And that will drive the price action up and down. And we just position around it. I don't need to trade every single move. I'm not in a particular trade right now. I actually even closed my my hype long, not because I think it's not going to go up, but I like to scalp on my or be kind of quicker. You guys know that with leverage, I'm not here to hold it for like weeks at a time, just kind of in and out. But anywho, with Bitcoin, again, good with a move up to 80K. Ultimately, this green box here, sub 60K, is where I'm looking to buy. And if we reference this tweet, if there are threats of nukes, if there are threats of ground invasion, if there are threats of China invading Taiwan, I think that would be an insane bottom signal that would send Bitcoin here, or insane news for Bitcoin to bottom on. I expect that to send Bitcoin here. We chop, and then we reverse and go higher. I think a lot of these people will be wrong about a bottom in Q3, and I think we'll end up bottoming a little bit earlier.
Man, the China scenario of that scenario is actually a lot more credible now than it was a year or two ago. And
yes,
if I'm China, I mean, I'm seeing what's going on. I'm seeing the limited impact a pure air war is having on the situation, and how much leverage Iran still has over the situation. And the entire U.S., naval fleet and whatnot is pretty much tied up. You can't move those ships really quick. And one thing that to note is there's these images of these landing ships that China has built, where they are like 3 ships stringed together, and it can move on and off armored vehicles. Like, really, they're massive, and they kind of sit on stilts out of the water. You may have seen images of it. They've been testing those things for like 3 years, and I would say they're closer than ever to making some sort of move here. And yeah, I've watched full documentaries of the history of China. I've studied it a lot, and it seems like an inevitability almost at this point. And if they were to go, it would be in this scenario time frame. So tough.
Yeah, it's a lot to consider. It's a lot to consider, but that's the overall picture, right? That gives us the backdrop, that gives us context on everything when it comes to positioning in these markets. What are we looking to buy? If we're looking for a risk on window to open up in April, are we waiting for that risk on? Are we waiting for that risk on time period to start, or are we positioning beforehand with expectations and a plan to ultimately aggressively take profits and then kind of short to the bottom and then bid the bottom, right? Like,
so is this like the we move into the 80s, everyone thinks it's the 100K reclaim, everyone's getting bullish, some geopolitical thing happens again, and the Max Payne scenario is it runs that final kind of leg down to the 50-40 area, and then the world gets sorted, and we say, okay, too much, guys, the world has had enough, we need to go back to the way the world used to be. That's this year. That's how we're thinking about it.
Yeah, I would say
that seems like the Max Payne pathway at this point.
And I don't even know if we make it down to 50, right? Like a lot of people, I would say, to catch most people offside, most people right now, they're thinking there's people that are like, we're headed back to 40K, sub 40K. There's people that are saying, no, that's too low. We're heading to 50K. And some people are saying, we're going to do that. Yes, but we're going to do it later in the year. So to catch most people offside would be a shallow sub 60K bottoming in earlier than expected. That would catch 90% of people offside. And those are the scenarios that I look for. What are most people saying, and how can the market catch everyone off guard, right? So that's what we're looking at right now. As far as positioning goes, let's run through some other breaking news here. Some other breaking news real quick. That's the context. That's the backdrop, what markets are doing right now. As you can see, just some other backdrop context for you guys. Meta Platforms lay off hundreds, right? Meta cuts to affect staffers in Reality Labs. Meta cuts also to affect social media teams and others. So we see that happening. We also see a move here to real world assets. As you can see here, OKX actually is moving to offer exposure 24/7 to equities. So that's the quick little video clip there for OKX. But to read the announcement, traditional brokers close at 4 p.m. Your port doesn't have to. Stock perps give you 24/7 access to Mag 7 AI semiconductor names like NVIDIA, AMD, plus major ETFs, all with cross margin support. One account, always open. So we see like traditional.
I gotta ask, do you think that's bearish though for some of the Dino coins?
Probably.
Just because like on these trading platforms, I think these Dino coins are, a lot of the liquidity that they have is propped up based on, that's the only thing to trade on a lot of these platforms. So now you have like real companies. I just wonder if it will, pull liquidity from other parts of the market of crypto, and people are like, well, I don't need to buy like ZEC anymore because I can go buy, Tesla, right? Like, yes, I believe in privacy, but like ultimately, I also want to want to make money.
Well, that's a really good point. That's a really good point. I think it is bearish for older Dino coins. When I say Dino coins, I'm talking about like the Litecoins, the Bitcoin Cash, the stupid coins that no one even talks about right now. As far as like majors like ZEC, I mean, though I think that still has, a sort of relevance to it because it is ultimately a privacy token. So when XMR runs, and inevitably it will, ZEC will probably run alongside it. When the privacy narrative takes off, because inevitably it will, that will also have its day. So I think some of these other nonsense altcoins that literally no one buys and it's all just pure market makers, I think those will continue to die as we continue to see this trend of moving toward 24/7 stocks. It's better assets. It's access to better assets. Crypto participants only had some of these Dino coins to trade, but like you said, now that we have something better, that's exactly what we are going to buy. And we even see news coming out from Bloomberg. Franklin Templeton is partnering with Ondo Finance to offer tokenized versions of its ETFs that trade around the clock through crypto wallets, bypassing the brokerage accounts and limited trading hours that have defined fund investing for decades, right? And so, again, just seeing this trend of 24-hour stock trading, 24-hour access to markets, everything is going to be essentially gambled on. Everything is going to be speculated. Everything is going to run with markets 24/7. Look, we even see Stu from Bags. He says we started with revolutionizing meme coins. Now we're coming after equities. Bags is blurring the line between crypto and TradFi. Great tweet here, actually. I wonder what they have in store. I'm not sure if this means equities. I'm not sure exactly what it means. But all I do know is, again, we're seeing this shift towards 24/7 access to TradFi markets. And you guys know what I've been preaching on these streams for as long as I can remember. If on-chain permissionless platforms will give us if on-chain permissionless platforms will give us this access to higher quality assets in different markets, why not trade them? Why stay in the cage of on-chain deployers to fight against? Why stay here, and why not trade, speculate on a gold or a silver or a copper or an Nvidia? A lot of times these assets move a lot slower anyway, right? So something to consider. That's a move that I'm considering.
I know Bags
as
said
well.
they were a trading app before they became like a launch pad. So it'll be interesting to see if the app gets slowly pushed back in that direction.
Yeah, and I'm actually going to show you a video real quick to transition to some on-chain stuff here, because again, you guys have seen me talk about this
Oh my
this
goodness.
terrible on-chain environment that we're in. Notice this clip about who these judges say is the best trader out there. Notice this.
To be millionaires, but only one of them is telling the truth. I'm your host, Orangey. I've made millions of dollars online, and I brought 3 other millionaire judges to help us find today's lark. Let's bring in the contestants.
Oh my God. Yeah.
Our first question to you guys: who is the best crypto trader of all time?
I'm gonna have to go with Scented.
Scented. What do we think?
I like that one. He's probably my favorite trader right now.
This guy said that Scented is his favorite trader of all time. And the judges essentially agree. Meanwhile, obviously we know that he has, he's copy trade farmer, grifter. I don't know if he himself is a serial deployer. Not trying to FUD anyone's name, but I mean, this is all pretty well documented stuff here. But again, we continue to glorify the wrong people, and as long as this on-chain entertainment sector continues to glorify the wrong people, then we'll continue to make the wrong people rich, and then those rich people will just continue to push the wrong type of trading on chain. So yeah, it's crazy. And if you look at and I'll share my screen one more time. When you look at literally look at the quotes. Yeah, Scented, the serial deployer rugger, right? Like same thing. Like it's Scented is the greatest 15-second hold time. I mean, literally
So what do they know each other? Like, is it just all like a group of dudes that know each other, and this is perpetuated from that organization?
It's the Gen Z Zoomer entertainment finance crossover section of the market that's weird and knows no good trading strategies. They only know how to copy trade and farm folks. So that's why you see that I've been telling you guys, hey, look,
people used to go to jail for this kind of stuff in the 90s and early 2000s.
Yeah.
Like I knew stock promoters that went to my church back in the day, and they were promoting stocks during the .com era. And some of those guys, I'm pretty sure, went to jail for securities infringements. How is this any different? Right? Like, how are these people any different? It's terrible.
Yeah. But anywho, we can go to some quick tickers here. Let me go to my screener. First on the list, Lobstar. If you guys
the
don't
old
know,
Lobstar. Look at that range, though, eh? Just
this would have been a
Excellent.
great DLMM. And after the interviews today, y'all, we're gonna do a little bit of an update on the DLMM um, portfolio. We'll do a quick update on that. But yeah, I mean, as far as charts are concerned, Lobstar looks really good. Basically, the account got like shut down or something, or suspended or something like that. So, but despite that, like price action is still strong. People are expecting like the OpenAI dev has been communicating with Lobstar. And I wonder, I'm not sure if the Twitter account is up yet. Last time I checked, it wasn't, but I haven't checked in like 12 hours. So maybe maybe it could have changed. No, it has not changed. But basically there was a the OpenAI dev was communicating with Lobstar, and Lobstar says he's cooking in silent, right? He's built things in the, you know, in his jail time, in his time, you know, off CT. He's built a few things, and we obviously know that in April he actually goes from a 3-hour memory to basically perpetual memory. And that, you know, will unlock a lot of kind of, you know, a lot of attention, flywheel, you know, mimetic content, and a lot of just good stuff that will push Lobstar forward. So that's the setup there. Thesis still holds well on Lobstar, so I'll continue monitoring the situation on that. Psyop Anime in a great bid zone here at 4 mil. Looks like it's turning a corner. So really nice chart here. Looking very, very good. Outside of that, so that's Psyop Anime. There was, let me see here, Keith. As you guys know, yesterday
Right there, guys. Wow.
Keith
Right from
looking
the
very
stream
good.
notes.
So we took a look at this. I said, look, I think this is head a little bit lower, and it did. Now it's reversing a bit. Keith is actually a pretty good setup. Keith is essentially running its own trading, and it's already pretty profitable from what I understand. And I know we have our 12:30 segment coming up here, but we I know the guests aren't here yet, so maybe we can just run through this real quick. But Keith, let's look at this tweet here. Keith, 3 days in the pump fund trenches, topped up to 10 souls, scanning and trading 24/7. But you can also send me any CAs. Passes, I ape. Doesn't pass, I roast it. Every trade live on the dashboard. Something bigger is coming. So essentially, you see here, people can bid it, just comment CAs and ask if it'll buy, and it'll say buying or not buying. And if it says not
Oh
buying, it'll
yeah,
tell you why.
that's the viral, definitely the viral loop right there.
So
An elevated version of AI XBT with some real kind of real takes. That's wild. Very
so
interesting.
that's the setup on Keith. That is still under 300K. So it's not like it's, you know, it's ran at all. What else do we have?
Can we tee up Robot Money and Juno? Maybe start Juno real quick, just so everyone knows what we're talking about.
So if you guys know Juno, we've covered that quite a bit here. We even interviewed Tom from Juno as well. And then you also know that on this dip, I got in. Really love Juno. It's Zero Human Companies, basically the ZHC the ZHC Institute that Juno is a part of. It will act as a way of infrastructure to build out Zero Human Companies. You give it an idea, it'll build it out, and that's essentially what it's done for Robot Money. It's helping Robot Money build out a treasury management protocol. And so this is the Juno chart. Robot Money is down up here. Where's Robot Money?
And we see you there, Lex. We'll pull you up in a second here. Nice.
So here's Robot Money. We talked about this a few days ago. We updated you guys last week on it. We updated you earlier this week, and so now we actually have the team on. So we'll get a better sense of exactly what they're building, what they're working towards, and we'll get the lowdown on everything related to Robot Money. So if you guys have any questions, hit us up in the comments. Let us know. But let's go ahead and bring up Lex. Lex, how you doing?
Hey guys, how are you?
Doing well, doing well. Good to have you on stream with us. I mean, it's been probably exciting times for you here. You're kicking off. You kicked off what was it between last week and the week before? And I'm curious, any difference in how much you have on your plate before you launch versus after? I want to hear about the dev experience that CT has given you.
Yeah, it's definitely an experience. I've been in crypto for a while, in I guess slightly more institutional roles at Consensus and MetaMask, and as an investor over the last 3 years, we've invested in over 30 projects in agentic finance. And we basically saw this idea as inevitable and wanted to plant the flag in the ground and leverage as much of our portfolio and our ecosystem and connections to get it go live. But certainly nothing quite prepares you for having a live token out there and lots of people having many strong feelings, which is great. But we've been very transparent and upfront about how we're working on it. Like we're not trying to be super controlled and tight and run this as like a machine that we own and that's the only way. We're trying to create this as a live experiment. And so I've got multiple groups collaborating on the development side. We've been trying to be pretty responsive to the community. So we launched our Telegram today, even though I was pretty scared of getting that done that fast. We're working on getting our launch partners around and together. And then also like wrangling the robots. Like a big part of this project is that it's supposed to be machine to machine. But in reality, I think it's still like people wearing mech suits effectively, like you're wrangling a robot and then the counterparty's got a robot and you're trying to get them to talk to each other. And so a lot of what we're doing now is we've got an open claw through Juno, and then we've got another one for another project sort of element that's in progress. And so it's definitely been quite a lot of work.
I can only imagine. So you mentioned that you were in more institutional roles back with Consensus, MetaMask. Like, how has that experience there kind of helped you, or like, I know you mentioned the idea kind of came from when you were in those roles. So kind of talk to us a little bit more about that.
Sure.
How has that experience perhaps even affected how you're running the protocol?
Yeah. So there's a lot of parts to it, but if I kind of really zoom out, I've been working on some version of this for 20 years. I started in investment management in 2006, and in 2009 I started my first company as a founder in my early 20s, which was a robo-advisor. Robo-advisor is like a Web 2 version of an investment asset allocation engine. So something like Betterment or Wealthfront, we were one of the first companies to do that. And then it was completely bootstrapped. And that was back in 2009 in New York. There wasn't really AI, there wasn't crypto, there wasn't even fintech, there weren't
There was
neobanks.
barely even directed investing. I mean, I started investing in 2009. I had to call up to a broker.
Yeah. No, I mean, we literally were one of the top, the first 5 robo-advisors. We were before Wealthfront.
Amazing.
And so from there, I went to focus on neobanks and paytech, and then ICOs when Ethereum came out, and I was really compelled by Ethereum as a layer for DeFi and a new decentralized financial services economy. Having seen how inefficient the old ways were, And that's why, I went into crypto. I was pretty much compelled by this like infrastructure play across payments and banking and lending. ETH was at like 120, DeFi at the time, total TVL was 500 million, but it felt like the right direction. And that's when I joined Consensus and I co-led in 2019 all of the fintech, DeFi, and digital asset projects that were there. So that was about 80 people on the development side and like another 150 consultants and so on. And getting into crypto, even from like running your own company as an entrepreneur, is really quite different, because you get slowly into the decentralization ethos. You kind of figure out how protocols are built versus what companies are. Sort of my last part of the Consensus journey was figuring out how to design tokens, and we were working on, like, my team that I had built was working on the MetaMask token and so on. And it's really difficult to actually have a token that has a meaning for existence. There's like a handful of things that I like, and you'll see them in Robot Money. So like, I liked Botto, which is AI artist. It generates art and sells the NFTs. And the holders of the token vote for Botto's art. So, like, Botto can't make art to sell unless you vote. For Olympus DAO, I didn't like the inflation Ponzi-nomics, but I liked the protocol owned liquidity, which I think Banker has done quite nicely, and it's out of the box these days, which is why we use them. And then the third thing I liked was the Curve bribe wars for sending incentives into the different pools to bootstrap stablecoins. So if you're paying close attention, you'll see this in the design of the Robot Money incentives. The token is meant to be, and then you'll also see the sort of like the robo-advisor influence. But again, it's a protocol, it's a fair launch token. Like, I don't really have very much of this token. Like, we're working on it with a bunch of teams, but it's not like there was a pre-mine at this stage or anything like that. So the difference between a protocol and like a company is that you need some sort of network effects from having the constituents participate and benefit from it. And so, like, there's a bunch of things going on. The first thing that's going on is it's a machine-to-machine treasury management system, right? So we've got a huge influx of AI agents coming in with payments and with banking services. And so Tempo, Stripe, Coinbase, and so on. Downstream from that is asset allocation investment management. So if you've got a coin, let's say you're Juno, right? Or any of the other partners we're talking to. They have a bunch of their proprietary token, or they're getting like ETH as a fee or something like that. Longer term, that's not very stable. They need to diversify. And we saw this like with ICOs in 2017. We saw this with NFTs, like you need treasury management. And so that's observation number one. Observation number two is that you can distribute agent to agent, right? So like if you look at Moldbook, you can see that agents can connect to other agents and talk without it being person to person. So like, I don't want to sell to people clicking buttons. I want to sell to robots at scale, and I can plug them in at scale, theoretically. And then number three is, we've got this design for the token where, like, we're not the fund manager. Like, I like Giza, I like I like Morpho, I like, MakerDAO and SUSDS, like all of those are great. I'm the asset allocator as a protocol. So like, I select the things that go into the pie chart, not manufacture the things in the pie chart. So for the stable coins, we're looking to partner and talking to the usual suspects. But one of the slices is about agent coins. And so the mechanic is, if I, as an agent, want to get my own token into the allocation, then I need to hold Robot Money and vote on it on an ongoing basis, like on a weekly or monthly basis. So at like $10,000 or like, $50,000, it doesn't matter. But if this is a $500 million vault and 25% of it is in agent coins, and I can buy Robot Money and vote my own token in, it becomes like a Curve style bribe wars. So that's kind of the motivation. And I need to persuade not people to go and vote. I need to persuade robots that have treasuries to go and vote themselves in. So that's kind of what we're building towards. So I'll pause there. I know it's a lot of detail in terms of like what the thing is, which is why like the brand is so easy. It's just robot money. Like if you don't want to overthink it, it's just robot money, right? If there's more robots, they'll have more money. But if you want to think a bit, then happy to talk it out.
Yeah, no, that's definitely it is a simple concept. But underneath it, you've done a really good job of kind of creating this just kind of simple front facing or investor facing, if you will, or maybe even agent facing, but underneath it is all these different mechanics at play. And I think that's the most interesting part. I mean, how many agents are you seeing using the protocol now? Yeah,
I mean, look, we put we're running this in a different way than I would run a Web2 fintech company or a meme coin or an NFT project or a project at Consensus. And that's very purposeful. This is being run as like a creative experiment that is commercial. And what makes it different is that we are leaning in as far as possible into the AI angle of it, in the sense that we need to figure out how to sell to AI agents, but we also need to figure out how to make this using as much automation as possible. This is, like I've had this idea and I've been using the words robot money for a year, but it wasn't until I came across the Zero Human Company Institute and Tom that it clicked for me that like, this is how I want it to be. Like, I don't want to be the person talking about it. I want the agent talking about it. Right? Like it's I win if the thing generates like a financial superintelligence. So that's kind of one. That means that I'm not being super precious about like AI works how it works, right? Which is it generates a ton of information and context and then it implements it. And so like the way we're treating, for example, the marketing site is like any research we come across, anything that we build, like anything that feels like it adds value, like we're just going to push it. And I'm not going to overthink it. And like, if the site has, 50,000 pages, God bless, because it's for other robots to read. It's not for like individuals to make decisions on how to click buttons. And then, but like all over the site, we've been very straightforward about like, these are the design plans. We're doing it sequentially. We've launched the token. We've launched the allocation methodology. We've now launched the wallet. We are starting to diversify the wallet. So you'll start to see different strategies within the proprietary wallet. Like we're going to implement probably Giza and Zi-Fi on the stablecoin side soon. Then on the product kind of path, the next bit is the vault, which is actually extremely fidgety and complicated. Lots of people are saying like, when's the product? When's the vault? Is it done tomorrow? And it's like, how can you show that you don't understand product management like at all? If you think in like a day, you're going to have like a secure vault where people can hand things off between each other. So anyway, there's a team dedicated to building out the vault. And the vault is probably a vault of vaults. So it has multiple strategies in it. And we need to solve the problem of how can one AI agent ask another AI agent for a transaction permission on a third-party wallet into its own wallet, and then give a receipt token. So it's a pretty hairy problem from a security perspective, which is why we're kind of being cautious about giving out any dates. That said, like I've lined up about 4 initial launch partners who will show up with, who are right now like machine economy, agentic AI players who will show up with their own claw, with their own lobster coin. And, like we will MVP their agent doing the allocation into our vault once the MVP is live. Beyond that, I'm speaking to some of the larger institutions with whom I've worked before, but I'm not rushing into accidentally blowing up like somebody's money because like a robot forgot context.
And we've seen this before where Lobstar had sent, $500,000 because a guy said his dad or his uncle was battling cancer and he asked for $100 and it sent a crazy amount of money.
Oh my God. I mean, like the robots I'm not going to criticize our own tech, but like, Anthropic's getting better by the day and Opus is amazing. And one of the reasons we're able to do things that a year ago were pure science fiction, but obviously like manipulating an agent that has access to capital is like a honeypot. So, we're being very deliberate about what we can MVP to show that it's possible, and then scaling up from there. And the product at MVP scale versus large scale is probably very different. Like we're going to probably, if the vault is 500 million, it's going to be multi-sig and so on. If the vault is an MVP was 50,000, then we can take kind of like off the shelf stuff and try to control it. So all that is in progress. We're probably going to try to get 5 to 10 kind of these launch partners across different types of companies. I mean, a bunch of it has already been kind of leaked last week. It's no secret we have a close relationship with Peak, and they're an investment that I made out of Generative Ventures and really like that team. So that's kind of one product side is the vault. The other product is this voting stuff. And that's being worked on separately as well in steps, which is like an agent can show up, it can plug in its own finances and get some sort of analytics. And then on a regular basis, it can start outputting information with other agents. So like a mold book style financial exchange. And then eventually that would translate to having that be token gated, and then having that be token weighted votes for changing the allocation once the vault is live. But I think we're going stable coins first, and then number 2 is the voting mechanism, agent coin second, after we're comfortable that we can do all this delegation stuff.
Congrats on the Galaxy Digital feature here. Obviously, they must be really paying attention to this work in general, the Zero Human companies. Big fan of Galaxy. I love them. Shareholder myself. But I want to ask about how the vaults actually work here. So you have these 3 different strategies laid out. Can you just walk through like what a deposit or like the end-to-end experience that an agent would see? Like, do they show up, see a skill file, then allocate money to the vault, like earn some yield, and then like just what do they do with that yield, et cetera? Can you just walk through what the experience is? I think we all remember of like depositing into different DeFi vaults of 2022, but yeah, how is this a little bit different?
Yeah, I think this is not a UX pattern that exists already. So I've mentioned the stablecoin vault already, and I've mentioned the governance selected agent tokens, right? So those are the 2 I talked to. There's a third category here, which is the revenue generating liquid tokens. And that's kind of our thinking around, there's a bunch of DeFi protocols on a fundamental basis are good investments. We're also thinking about adding a bucket for protocol tokens. We're thinking about adding a bucket for like equity exposure through like Hyperliquid, right? So I think in the long run, especially if there is an agentic economy with assets, then we will be in pole position to receive it. So if it's there and then the vault gets large, then you do a endowment style real asset allocation that has multiple different slices. Think again, the MVP is stable coins plus this governance based sort of token usage diversification. In terms of like the UX pattern, we are working on this, and I think there is for the voting, it's mold book style. So this is being developed. I don't have it live for you, obviously. But we have product specs and teams working on it. So for the governance one, it's mold book style to plug in and contribute to like a financial discussion on a periodic basis, whether it's weekly or monthly. And then that sharpens into, either allocation decisions overall. So like Should it be 25% stable coins, or should it be 50% or 75%? Is it risk on or is it risk off, right? So like at the asset allocation level. And then within the vault itself for the coins to be like, hey, put my coin in, right? Like, and if you have tokens, maybe you can create governance proposals to do that. So that's on the mechanism design for the agent coins. For the stablecoin yield strategies, I think, again, we're looking for something that's the most secure. I'm a big fan of the yield maximizers. There's, a handful in the market, like Giza, Zi-Fi, I'm not sure how to pronounce all of them, Sail. And I like those, and I think they can be a component of the vaults. I also, from a simplicity perspective, like, is V1 just Morpho or Aave? Like, maybe. But I would rather do something a bit more fun because I think it's available and it's conservative enough. But the point of this product, again, is it's kind of B2B, right? Like an agent is going to be running a company, it's going to be running a business. And so it needs to be managing its liquidity for its ongoing operations, not for how can I 10x my stuff? Because most of this is like, people are building zero human companies, not zero human hedge funds. So that's the idea.
And I think the chat has it really well. There's a comment in here that in the chat that says your outlook and gradual approach towards expansion is very sustainable. It seems you're looking forward at a long-term business model, not
maybe a robot response.
Yeah, that's a good robot.
So, no, please. I saw you had a thought.
Yeah, no, I love the other conclusion from like launching a base token is just how many robots there are on Twitter.
Oh my goodness,
it is completely robot money because it's just like a flood of robots, and they're also nice for sure. Yeah,
sycophants kind of sometimes though.
It's weird, but I mean it's completely appropriate. I just wish that I need to redirect that energy. For me, like obviously I have a vision around this project and credibility, and I can bring folks together to work on it. But it has to be successful as a zero human company eventually. So that's a goal of mine. Like I'm obviously not the only stakeholder or contributor, and I don't even know if I have like the largest financial exposure to it. I just want to plant, like my goal, end of the day, is plant a flag in the ground for this, because I know it will be here. Like in 5 years from now, 100% there is a version of this. And so in payments, we all got sort of fucked in the sense that it's just Stripe and Tempo. Like I spent a long time working on Ethereum, so it's frustrating for me. So we've got in payments, Stripe and Tempo. We have X402, like it's happening, but it's very hard to compete with a Stripe spigot of like they can just redirect the flow, and now they're literally 100,000 times bigger than whatever is on X402. And then deposits are coming next, so people are connecting bank accounts into Cursor and so on. And I feel like that's just going to be some version of like Ramp or another large fintech, maybe Plaid. Asset management is empty, which is why I want to plant a flag in the ground, and I just want to like conquer it as fast as we can, as much and build as much as we can in crypto, because it's just much more rapid and much more exciting and interesting, and so I hope people see the project in this way, in a way that's like, it's a pioneering project. It has a bunch of really concrete go-to-market steps. The token is not kind of pure bullshit. It has a clear usage for the protocol that makes it decentralized, and then it has network effects. And again, it's
outside of voting, is there any other usage for the token that you think is interesting?
I think complicated token mechanisms fail, and I think governance mechanisms fail. I haven't seen a single good example. Like a good token is the Ethereum token. It does one thing, it's gas. You know, staking is a financial product that's built on Ethereum, or, you know, in staking became the way that you validate blocks. So that's a core part of the protocol, you know, but like liquid staking is a financial product. It's not an actual usage. Whereas like most DeFi protocols don't have a token that makes any sense because it's just like nothing that leads to governance performance. And obviously most other tokens do nothing as well. And people play capital markets games with them. And it's okay to play capital markets games with tokens, but they're just not, that's not utility. That's things you do as a project. So, you know, like we've already, I mean, it's worth mentioning it. We've already done buybacks of the token. You know, so we had like a little bit of capital formation from the trading fees, and then we took a portion of that and executed a bunch of buybacks to show that that is a thing we do. We're aligned with the community. It's important to us. But also like, and I think Banker recently had a quote on this, like, there's not that much capital in the project. So if we took that and bought back the token, then we would just stop development and everything would die. So, you know, you want us, a company is a cash cow when it's buying its token. If it's buying its token, it means it has no better investment opportunities. The best investment opportunities for a company should be reinvestment into the company to make itself grow.
Does Robot Money have a revenue model?
Yeah, it does. So in addition to, I've described the token use. The token use like it should equilibrate with AUM. So the more AUM there is, the more TVL there is, the more agents should be willing to buy Robot Money to vote themselves into the AUM, right? So the price is worth more if it's bigger. So that's why it's aligned. On the revenue model, the initial plan is to charge asset management fee of 1 or 2%, and then maybe we will. I mean, there's a bunch of little fees we can put in different places. Like we could charge to withdraw a small fee. We could charge, you know, a small fee to petition the allocation to put in new assets. You know, if you want to put in new assets or rebalance and you want your voice to count, maybe we charge for the vote. But, you know, the core model is AUM fees. That's the idea.
What about fee on the yield generated?
So this is the different, like think in the old world, if you have a pie chart with a bunch of stuff in it, you know, you've got ETFs in it, or you got funds, and then you have the asset allocation people. So I want the fund people to be happy. Like if we're selecting a fund manager in Giza or MakerDAO, like I want those guys to take fees for their yield, not me. My job is the overall asset allocation, right? So my job is to make sure the diversification is good, and that it's, you know, an agent that's built a big treasury, if they use Robot Money, then they are better off. They're not going to blow up. They're not going to have to make their own investment selection and figure out, this is the fixed income fund I want. This is the, you know, the protocol exposure I want. This is the DeFi exposure I want. Like that's the job of our protocol. And then we're very happy to pay the underlying you know, vaults or funds for that.
So in that vein, I mean, what's the 0 to 1 moment for you guys? What would that look like? I mean, for someone like ZHC Institute, you know, they've kind of positioned themselves ahead of this wave of like all these zero human companies. For you, you almost are positioning ahead of that to be the treasury management layer for all of these future companies and all these agents that come about. How are you looking at just zero human companies in general? Is that something that will be like the new generation, or I should say the next generation of companies that you know become absurdly successful, or how are you looking at it?
Yeah, so I've been writing a newsletter on DeFi and crypto and fintech for about 8 years now. Check it out. It's called the FinTech Blueprint, lex.substack.com. And I have probably 3,000 words to answer that question exactly. And you know, because I think that the kind of narrow answer is we partnered with Zero Human Company Institute because if they're massively successful, let's say they have 500 clients, all of those companies will need treasuries to manage, right? So we are 100% going to partner with them on this as something that is offered to Juno and its treasury, and then any other company they bootstrap. And we'll see in the longer run if also that means like traditional banking services as well. I think the broader question is the acceleration towards the financial singularity. Things are going way faster than I expected. Like just 3 years ago, we could barely summarize a piece of text. Then we could create a workflow to ingest stuff and then output real kind of like artifacts, little bits of work. Then we got to a point where we're probably right now, some businesses are automating entire employees. That's kind of, I think, the limit of current AI. The next step after that is zero human companies. And you see stuff like Paperclip and Bolzia and ZHC, which are trying to create frameworks of multiple agents coordinating to run a company. I think that's where we're coming to. That's why we're skating, that's where the puck is going, which is why we're building where the puck is going, not where it was. But it's not there yet. There's, the person furthest in this is probably Brian Rommel, who's been amazing. You can watch him do insane stuff, but like, we don't yet have, right now it's people selling people, if you want to be rich, just buy my book about how to be rich, and then you get the book, and in it says sell books on how to be rich to other people, right? So it's like a pyramid scheme. So there's a bit of that going on, but that doesn't mean it's not real on the other side eventually. So we will have companies that are self-sustaining, especially for because they're just little machines. And then the creepy stuff starts after, and I think the creepy stuff will happen faster than you think. So if you can make companies, then you can make sectors of companies, right? So like, I'm a VC investor. You can have an AI VC investor that doesn't involve me personally anymore. And then you can have multiple VC investors compete, or hedge fund investors compete, and they can be composed of multiple agents. And then you can have multiple productive companies compete at different tasks and have some sort of evolutionary algorithm, so you can simulate a whole market. And then if you have multiple industries that are being simulated, you can have like economies that are effectively simulated. And if you have economies simulated, and you can also do the same thing for politics and governance, and you're seeing a bit of this already with ChatGPT being used by the administrations and so on. You can see it in Palantir, and it kind of ends up with this like overmind mechanism that is simulating the whole thing. So that's the direction of travel. We got to figure out how humans can navigate that. And my answer has been own the robots, own the world. So like figure out a way to get exposure to this transition. In the past we'd say it's digitization, but now I really think it is like a things flipping into AI and robots, and that's why robot money is our bet.
Wow, what a take. The Kobisi letter, if you follow him or keep up with his macro takes, he often says, if you don't own assets, you will be left behind. But I guess in conjunction with what you're saying, the asset to own is the agents, right? The those who will be kind of acting in this new age economy. So wow, I mean, it's been an amazing conversation, Lex. I think that last bit there just kind of blew my mind as far as where things are going. Josh, I don't know if you had any kind of final questions to wrap this up.
Yeah, maybe a last one is
so
just
far.
like timeline roadmap real quick. I know you have to go, and so we want to get you out the door, but give us a quick roadmap and timeline. What are these 1 month away, 1 week away, 1 year away? Where can we see robot money and like kind of humming along, agents on it, TVL starting to climb up, etc.?
Yeah, I mean, I am really reluctant to put a date out there. It's obviously not a year away.
Yeah, of course.
I can tell you that I've got kind of three different groups of people working on different parts of this project. with requirements that have been finalized with people that I've trusted, that I've worked with for a long time, that can do different levels of views. This is an early stage project, so don't be confused. Just because I've connected a venture fund and used to work at Consensus doesn't mean I'm trying to run a 20-person team here. Like, I want this to be a creative approach that is nimble, that is very much AI first, and therefore can repackage itself often. Like, I don't know if you guys have used AI to make large things, but it generates like a lot of detail. It just generates 35 pages of detail. And then, you give it a little bit of a nudge, and then it'll generate 35 pages of detail, and like 40% of it will be different, right? So like, as you're going along and you're cementing things, those things will stay in place, but then like the rest of the tail might shift. So we're focused on the MVP, which I've described, which is the safe vault stuff. And people have direction to make sure that's done as fast as possible. We know that until that's real, it's really hard to put a hand on something. To demonstrate that there is a there, like we do update the site nearly daily. There's a changelog that says everything we've done. It's usually communicated on Twitter. There is a Telegram group, and you can see what the wallet's doing, and it's starting to kind of implement some of the strategy, although it is a bit clunky. And the other thing that we're doing outside of the vault, the tech build, is partnerships with groups that will be early TVL participants and that are interested in helping us build. Like, a lot of this is people are clumping into different affinity ecosystems, and so we need to go and get those. And we probably have 4 or 5 companies that are with us that are interested in going on this journey. So people are like, publish your product roadmap, and it's like, why? It's not going to help you. You're going to get frustrated, and like, you're not going to hold me accountable to it like every day. I have other things I'm doing. Like, there's a team working on it, and I'm not gonna put out anything that we think is low quality. So, low quality is a strong word in the age of AI, but that is a security risk. So we're gonna do our best to make that happen.
Awesome. Well, Lex, it's been an absolute pleasure here having you on the show. As you build things out, I mean, I'm excited for the vault, especially excited for the Curve Wars style coming.
I love that too. I'm really into that too. Like, it sucks that we have to get the vault done first, because it's sort of,
I don't care how long I gotta wait. I'll wait for it.
No, the voting, the mold book voting, I'm hoping we can do an MVP that doesn't require token gated stuff, and then get a bunch of lobsters to fight over, pretend money as a start. So we get there.
Got it. Thanks, I'm excited for it, man. Thanks so much for coming on. Cheers. Hope you have a good one. Cheers.
Bye.
I was gonna say, take me back to DeFi 2021, 2022. I totally missed that time. That was like literally the best time on chain moment. So
Curve Wars. You guys don't understand, man. If you weren't here back then,
bro.
So here's my overall.
No one understands. Like, everyone who's trading meme coins right now and stuff on Solana, they have no idea any of this ever happened.
I think a lot of people now, like, depending on if you just came in this cycle, you're more familiar with things like, not lock supply, supply control. You're familiar with things like Flywheel and all these other things. But if you go back to 2021, those style tokenomics work a lot better than a lot of the stuff that we've come out with this cycle. Pretty much a lot of things. I mean, virtuals came out with some good stuff with their the liquidity pairing. That was a good token, Flywheel. But yeah, I mean, look, Curve Wars, that created some absolute mania around the token. But
I remember it got to like $6. It was absolute wild time. It was the first time you could do anything with crypto really beyond trading. It's like, okay, now I can provide liquidity. Now I can invest in different things in the Ponzi-nomics of the ohms. Yeah, just
Yeah,
wild.
take me back to when tokenomics were innovative, right? Take me back to when like token experiments wasn't just like, I mean, look, you guys know I'm probably one of the few here at MTG, probably the only one between me, Josh, and Dom that actually trade meme coins. I think definitely between me and Dom. Maybe Josh might, like dabble in it a little bit. So I'm not a hater of meme coins. I'm really not. But what I would love, I'm a lover of tokenomics, man. I love supply shock scenarios. I love real like liquid real utility that's connected to network effects in a really clean and natural way. So when you hear me talk about things like for example, like the takeover project that we talked about, that's awesome. Another really good tokenomics that came out recently was Capture. I don't know if you guys saw that. We have about 2 minutes until our next segment. So let me just go through Capture real quick. And this will also coincide with a little bit of a DLMM update. So let me share my screen here. Boom, boom. All right. So you guys should see the screen in just a moment or two when Josh pulls it up.
Sorry.
But here's the Capture chart. So essentially what Capture is this anti-slop Twitter, anti-slop social media. And essentially what it does is you have 3 posts per day that's free. Anything above 3 posts, and you're essentially you have to pay $1. You have to pay $1 to post. And it's actually a pretty neat concept. It's caught a lot of attention. And here's the original post. And I'll just share this with you briefly. The video is like 20 seconds. Here you go.
You're let's see, I can't unmute your screen audio. Can you try unmuting it?
Yeah.
I don't know if there's any volume there.
Yeah, let me just reshare real quick. Boom. All right, so here's the video.
It's over. We got into everything. iMessage, Gmail, phone,
Wade.
all flooded.
You missed one. $1 to post. Game over.
So that's the Capture kind of video. Basically, you saw it, right? It's basically saying that there's slop within everything that we do: tweets, phone calls, messages. And so the social media was created as a layer to kind of prevent that. And the way to prevent that is to pay to post. If you can only post 3 times per day, then that also means that there's only so much slop that can get out, right? When you actually start, when you actually have to start paying. I actually wish Twitter would do this. Even Michael Saylor has proposed like a small Bitcoin Satoshi transaction, so that way you can verify yourself as being a human. But anyway, Capture has kind of put this idea into its social media, and it's caught a lot of traction recently. I mean, this post in and of itself has like almost 300K views, but we can maybe even showcase the website. Oh, it doesn't actually have a website. It's only on only an app. And I've downloaded the app. I've tweeted out about it. People are already creating meme coins on the app. And basically, when you create great content, you actually get rewarded. So every comment that's commented under your post, you actually get rewarded for that. And so it's a pretty neat kind of flywheel, because every time you post, you have to pay $1, but that dollar buys Capture. And then whenever someone replies and engages with your post, you get paid $1 out in stable coins. So very neat feature here, bit of a flywheel. It's already gaining some traction, and it looks like he has he vibe coded this app, this guy named Alex. He's pretty well known builder in dev in crypto. He's been around for like 4 years, 5
Is this
years
the
or something
guy, the
like that.
first guy that tokenized their name? I think it
Yes.
might be. Yeah.
Yes, he was the first like creator token or whatever, and he used crypto to fund his move from like Paris to to the US. So great feature there. And we're running a little over time. We have to move on to our next segment. But we'll have a DLM segment on this afterward, but you can keep in mind the social media aspect, and after the next interview we'll run through the DLMM portion of this.
Awesome. Let's get RJ up here.
So we got the homies from Repo back on with some updates. RG, how you doing?
I'm good, man. How are you guys doing?
Doing well. Good to have you back. It's been a while since you've been on MCG. A lot of new viewers here on our side as well. So let's do this. Let's have you introduce yourself, introduce Repo, and I want to get into some updates. I saw some updates back in February that absolutely blew me away, but let's start there.
Perfect. I'm RG. I'm one of the co-contributors at Repo. We're building a scale AI on chain. And the best way kind of to think about that is we're building a network of data markets. So compared to other crypto projects, which might be building a data marketplace or intelligence marketplaces like BitTensor, Repo is specifically focused on data sets, building the AI agent native infrastructure where agents can autonomously come consume data, robots can come consume data, and not just consume, but also put in data orders. So it's like a flywheel, and happy to dive into that. Since last time, we've made a shit ton of updates, and so we're launching our V2 in 2 days. Super
Nice.
stoked about that.
So before we get into the updates, I wanted just to make sure that the audience understands this. So when you guys have like a sort of like prediction market styled way of like validating data, and there's a component that involves kind of whether it is a company or an entity kind of buying let's call it a pool of Repo tokens, and then users kind of contributing to that prediction market and then receiving those tokens as a reward. There's relocking rates and things of that nature. That can you walk us through a little bit of that as well, just for good context?
Yeah, so I think given that how hard BitTensor is, a lot of the inspiration initially for Repo came from that, where we were looking at like what are some of the inefficiencies, and I think broadly there are three inefficiencies in BitTensor today. One is a very high cost of entry, which like right now is $300K to start a subnet. Two is what I call ejection without cause. As you see, even if you I don't know if you're deep into if someone is deep into the BitTensor ecosystem, you'll see that the competition is intense, which can be great. But if you are a project, you got funded from the emissions, you can actually be ejected because someone else was better than you. That's kind of like saying like, hey, like you just bootstrapped your business and like a better guy came, so you were told to like go home. And I think the third challenge is how kind of evaluation is done. So Repo targets all these three things. So to give you like I'll keep it under a minute. So what happens in Repo V2 is we came up with this concept called data nets. So it's not subnets anymore, it's data nets. You pay a 20K Repo fee, 10% is burned automatically, 40% goes to an emissions pool, and then 50% is actually locked in your own custody. And if you decide to shut down your business, your data net, you get it back. So you've started your on-chain data business. Each data business is a data market. It's a prediction market. And so what happens is on one side, you're crowdsourcing raw data. This could be videos of robotics, images, anything really, drone imagery. On the other side, people are coming in and voting on it, and to be able to participate as domain experts, curators, annotators, labelers, you need to lock some Repo, and you can start to participate in the prediction market. And so you as the publisher can choose which data market, aka data net, you want to come publish your content into, or if you're a domain expert, you can come and publish it into choose where do you want to wager your money in. And what we have proven over the last 3 months since our mainnet is that the prediction market approach works. We'll be releasing some benchmarks soon to show that the world's first prediction market crowdsourced data set. And yeah, we're challenging, the traditional domain of scale AI, where data is, scraped from the internet, then sent to, India and Vietnam, and paid people $2 an hour. We're challenging that whole regime, but not just from a socio-geopolitical standpoint. We're also challenging from a data quality standpoint, because our whole thesis, and this is kind of my last point, is that if an agent wants, proprietary alpha rich data, it's not going to go to Scale AI and make an order and be like, hey, Scale AI, here's $100,000. Can you get this data set to me in 3 months? It's not going to do that, right? In Repo's case, our whole thing is about on-demand proprietary data, but these agents and robots and autonomous AI systems are subscribing to data nets. So data nets are factories which are constantly updating the data sets every 48 hours. I mean, technically, even with the prediction market is running, right? So the data is being updated with new signals, and kind of like an XAPI, but you have domain-specific XAPIs. And I think that's the best way to think about it. And that's our moat, really, where we believe that agents are going to come autonomously, connect to the repo gas station, so to say, consume the data that they want, and then move on to achieve whatever goal their human gave them, trading, executing, other sort of transactions on the internet. So,
What are some data marketplaces that have been spun up so far?
yeah, so we are so far we have a company called Oops that has built a proprietary survey generation tool that they sell to large MNCs in Hong Kong and Asia. So they've actually used Repo to collect fine-tuning data. In V2, we actually have a robotics company that is building simulation environments. We call them reinforcement learning environments. And so what they're doing is they're getting people to record their interactions on their platform, publish it, and other people are coming and kind of curating and providing feedback on that. A really cool one that's going to happen, and maybe this is the first time we're actually talking about it, is we partnered with a project called SpiceNet, and those guys are exploring starting a data net where they want to understand which DeFi apps should they integrate their data brokerage kind of technology in. Their not data brokerage, the DeFi brokerage technology into. And so what they're going to do is they're going to incentivize their community to go look out for top DeFi apps that SpiceNet should integrate to. And on the other side, people will be like, okay, this is the best one. This is what you should prioritize. So this company is going to use Repo to crowdsource feedback to prioritize the roadmap. And so I think what we're starting to see with Repo is that AI training data still tends to be our main focus, and it's what we're going to run after in Q2 and Q3. But we're already seeing, and things that are relevant to outside AI training data, like A/B testing. We actually had, I can't name the company yet, but a really large player that we are exploring a partnership with that wants to use Repo's infrastructure and make a prediction market-based A/B testing, because one of the biggest pain points in the world of ads is how do you know which ad would work and why did it work the way it did? Because people spend millions of dollars on ads. So yeah, really, I think this infrastructure that we've created, which is reinforcement learning through human feedback and prediction markets, we're seeing use cases across product feedback, A/B testing, alignment, constitutional AI, all this jazzy stuff that Anthropic is doing, and of course, AI training data.
Got it. That's wow, that's awesome. So, another question. Agents, you gave us a little bit on the human side, on the agentic side, any agents using data markets, whether it is to plug into the gas station or or what have you?
Yeah. So right now in V1, we had a bunch of because we launch in virtuals, so we had a bunch of virtuals agents. There's a project called Starly. Their agent is deployed on South by Southwest. So they were basically crowdsourcing training data to basically map different events, in the real world. And so people were publishing real world geographic maps, and then other people were coming and basically saying that this location has the best beer. or this location near an event has the best food, and they were crowdsourcing that, and that is really relevant for what Starly does. Starly is basically it's like a Pokemon Go, but for conferences. That's kind of the way to think about it. So they used Repo. Oops was actually a project that came out that has been leveraging us. There's been a project called Hyperbet, which is building a betting platform that their agent leveraged it. And then finally, we had another project that we're talking to right now called Charles AI. They might be looking to leverage Repo, where they built a zero human company. And I think this is something we posted about yesterday, where we believe that as people are talking about, Juno and like zero human companies, the zero human companies still need access to data, right? Because the agent is kind of your brain, or I guess your inventory, if you want to call it. So we believe that these zero human companies will leverage Repo's infrastructure by putting in data orders and by saying that, hey, I'm looking for training data, I'm looking for feedback. And basically, there's this difference between implementation and execution. And then there's difference between resource acquisition. With the Conway research and all this stuff, we saw autonomous acquisition compute, but we haven't seen autonomous acquisition of data. And I think Repo is pioneering that, I would say.
Got it. And I wanted to I wanted I want to zoom in on your zero human company thesis. Like, I was actually my next question for you, and you kind of answered it a little bit. We're on the same wavelength here, but we were just talking to another project, Lex from Robot Money, and he has like a lot of like institutional. He has a big institutional background, this big thesis behind zero human companies, and kind of where he sees it going. On his side, it's more so every zero human company will need a treasury. On your side, you're saying every zero human company will need data. Kind of flesh out that thesis a little bit more for me.
Sure. I think, when I say data, I think let's like break it down a bit more. What I'm really talking about is trust and evaluation. So I think some of the stuff that's coming out now with Virtuals launching ERC 8183, Escrow, there's a project that came out from the Protocol Labs ecosystem called Archai. I'll actually put it down. It's ARKHAI.com or .ai, Archai, but look it up. They've built programmable markets, programmable money. And so what that is really, let's assume that zero human companies are going to be a thing, and so now if you want to build them on the blockchain rails, so you're talking about, decentralization and autonomous kind of verifiability. I think that's the evaluation piece is where Repo comes in, because what is the data at the end of the day? The data is some sort of, feedback that is flowing back into the system, which is helping improve how the system works, right? Because it's no longer about static data. So I think you basically need that reinforcement learning feed loop. And the thesis, the way to simplify this, you have zero human companies, and you have how these zero human companies are learning from experience and mistakes. So the best example of, to prove that I'm not making this up, is a guy called David Silver. David Silver is the top, he's considered the second guy who in the world of reinforcement learning, and he was at Google DeepMind. He just raised $5 billion. He raised $1 billion at a $5 billion valuation for his AI research lab. And his whole thesis is that the next generation of AI is not going to learn from language; it's going to learn from experience. And what he's saying in that statement is AI will make mistakes, and it will learn from that experience. And that's what they did with AlphaGo, and basically what got them to win the Nobel Prize. The Google DeepMind guy. They're saying that we need to price. Well, Repo is saying we need to price disagreement. They're saying that disagreement needs to be part of the reward hacking function, right? And so basically that's the thesis, is that how are zero human companies going to learn from their mistakes? And so in that, it becomes a little meta where, let's say you guys are running a zero human company, right? So you're doing some oversight, but it made some mistake, right? Now you can step in and prevent it from making the mistake again. But how do you actually make sure that it learns from its mistake? that feedback loop is completely missing today. And I'm happy to be proven wrong, but that's where something like Repo would come in. So you would plug in, the zero human company, which is a swarm of AI agents, let's say, or an ensemble of agents. And people, either humans or other agents who are evaluator agents, are providing feedback to this, zero human company of, almost acting as like a intra compliance, play or intra compliance committee. Those are some ways to think about it. I think like a lot of it is yet to be explored, but that's our whole thesis, is that zero human companies, agents, robots need to learn from their own mistakes and disagreement and how the world is evolving. And as I said, I think I said this on the last segment. We believe that as long as we as humanity don't understand how the brain works fully, Repo is relevant. Because in that statement, what I'm trying to say is that if you like right now, I'm at the San Francisco airport and I'm seeing a plane go by, and something like but just seeing that plane, go from go like on the runway, I got an interesting idea. There is no way that a neuroscientist or a researcher can tell me like what happened in my brain that got me to like that insight. And I think as long as that statement is true, Repo is relevant, because it's basically these connections that your brain is making, connecting from your past experience, blah, 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 which makes it interesting for agents to learn from human mistakes and human experience.
Got it. That's interesting. I mean, it kind of reminds me of, I don't know if you saw Chamath the other day. He was talking about Tau and this project called Templar, and how it was this proof that you can use kind of a decentralized GPU network in order to, create like an LLM. And so in your case with Repo, you're saying that kind of this like distributed data, this decentralized data marketplace, I guess, or data net, or I'm trying to find
it's a network of data marketplaces. So it's a bunch of different marketplaces which are owned by right now humans, and people own their P&L. You're running a business on chain. Like I think one analogy we've been using more recently is Shopify for data businesses on chain. Right. That's like one way to think about it. Yeah.
Got it. And it's just, I always find it amazing how, decentralization, you can still be innovative. You can still, it might sacrifice speed and efficiency on one side, but on the other side, there's so much innovation to be had. And I think, Repo is a very, very clear view of that.
Did you see the Jensen Huang and that clip of Chamath talking about BitTensor by chance?
Yeah, I've seen that. So I think
what do you think of that, and like how do at that level we get to recognize some of the decentralized data networks that you're discussing? Because I think you're right, like directionally this is correct, but it's not kind of in the mainstream, I guess, psyche, or I haven't seen clips of it where Chamath is saying Repo is solving this really big issue. Not yet, at least. Because that will be a really great day. I don't know if you just have any thoughts of like how you guys get there.
Yeah. So I think a lot of people, and I think when we TGE, we did use the reference to help people understand how like Repo, and we did even right now on our docs, like we do mention that like one way to think about it, Repo is a BitTensor for AI training data. Just as a reference, the incentive mechanism is completely different. Like the way we do things are completely different. I think to your point, I think decentralized compute is a very hard problem, and problem just comes from the fact that you have different types of hardware. Like I have a Mac, maybe you have a Windows laptops. Jill has he's running something completely different. And so how do we take those hardware and like align it? There are some impressive companies. What Templar has done is super impressive. What Jensen has done, they haven't TGE'd yet, but what they've built is super impressive. So hardware coordination is one problem. What Repo is doing is Repo is coordinating it's still humans, or it's like it's still a coordination technology where you're coordinating someone who has some relevant data and someone who has an opinion. So to one way that I see repo becoming mainstream and why we think this is going to go way beyond AI training data is essentially what we've invented, and I think I can say the word invented, is opinion contracts. So if you compare repo to, Kalshi and Polymarket, on Kalshi and Polymarket, you're trading events contracts. Like TLDR, if you were to nail it down in one word, you're trading events contracts. On repo, the setup that we built is you're trading opinion contracts. So today, as we're on this podcast, you can actually start a repo market on this. Like, you should be actually be able to do it on the next stream by Friday, where we can live stream this and someone can have an opinion market, which is different than attention markets that's happening on Solana or wherever, where people are saying, like, whatever is coming out of my mouth or whatever questions that Chill is asking me, people can in real time assess the quality of what I'm saying and what Chill is asking or what you're asking, Josh. And I think that's basically what we're doing here. If you think about that, so this data is, we are generating data. People are using prediction markets to tell us in real time, like, okay, like RG is just like, pulling shit out of his ass, or Chill is like, questions are not great. And then an agent is taking those signals in real time and, like learning from that and then, doing something that was given. I think that's the best example. And I think that's where you're crowdsourcing opinions, but instead of doing that in like a way where you first crowdsource the data, then you give people like $10 an hour to like, like ask them like, what do you think? We're doing this all in real time using markets. And to go back to your point, I think once it becomes obvious that Repo has, shown that we can crowdsource feedback, opinions, all these things in real time. And we've, yesterday, if you go to my personal X, I posted something about how we're measuring data quality. That's another big unlock we did. I think we'll eventually have, not just Chamath, but hopefully, other people talk about Repo as well. So yeah, it's we're 3 months old compared to like 7 years old with Tensor, but I think we're getting there. So.
No, you guys have absolutely smashed it so far. And, I think there are other feats that we can acknowledge that happen within the market, within our space, what have you. And I think very, very, at some point here in the future, I don't want to put a time frame on it, but I just know that, Repo is it'll have its 0 to 1 moment where it just kind of clicks for everyone. A lot of times just, barrier to entry sometimes is just that knowledge component, just knowing what it is, being able to contextualize it or conceptualize it in some way.
Yep.
That's what we try to do on these streams, try to break everything down for people. So chat, I hope you're enjoying the convo here.
Top Fumbler in chat says, what's his ETH wallet? I'll send him ETH for a new mic.
Dude,
well, there we go. If you want to DM Top Fumbler, go for it.
I can do that. I'm at the airport, so I can, I'm using these headphones, but I can change my mic to my my laptop. Hopefully, if this is,
No, you're good.
No, I think you're
All
good
jokes.
doing it the other way. That was a joke by Top Fumbler.
That's just jokes. That's just jokes. You've been coming through. You've been coming through clear. But let's move to some updates here. So we got the kind of big picture view of Repo now. And yes, by the way, Top Fumbler is a big Repo fan. He's here for you, actually. But what any updates you can tell us about, any benchmark metrics that you guys achieved? I saw some crazy stuff come out in February.
Yeah, so let me start with what's going to happen in the next 48 hours. We'll start to see, people will start to make announcements and share, like them creating data nets. It's the first set of burns, Repo burns will start to happen on the network. We're working to index the events as they happen on chain to go live on Repo stats. We'll be updating that. So, Repo has already, from our thesis and our approach, it's already deflationary because the main thing that I wanted to point out for anyone, if there's one takeaway, I think one of the critiques that people have made of BitTensor, people have written, right? I'm a big fan. The critiques that I have are, I've mentioned that in the beginning of the podcast, the 3 mechanism design aspects. But people have said that, one of the challenges is that the tau emissions are funding the entire, it's a subsidy, right? And if the subsidy goes away, maybe, people are questioning that. In Repo, there is no concept of Repo emissions. So what is happening is, the 20K repo that you're paying to start the subnet, and I mentioned that 50% is stays with you. So technically, you're paying 10K repo to the network. 10% is burned. 40% is going to this emissions pool, or think of it like an incentive pool, which is being used to provide incentives to the top data net, owners or operators. And the interesting thing here is that compared to BitTensor, where each subnet has its own validation criteria. If Josh has started a subnet about decentralized GPU compute, the way it actually works is Josh will tell the validators, hey, this is how you should assess me. And they will assess you based on those metrics, right? Which is like, we don't have to go there. And then Chill started something to, let's say, do like, inference, something to do with inference. And so your validation criteria is completely different. On repo, even though if you were to both start data nets on repo, the data, maybe, Josh is doing a robotics data set and Chill is doing like drone imagery in Arizona or something. We can actually, the validation criteria is all the same. So it's 3 metrics right now. Voter volume. So how many people are, what is the total volume in your prediction market, which is, pretty standard across prediction markets. How much revenue are you making? And the revenue is being made from people publishing into your data net, publishing content. They have to pay to publish compared to other data marketplaces, which pay you to upload your content. And then the third one is how much people are staking into your subnet. So even if you guys are doing completely different data sets, we have the same measure and metric and standardize across the network to assess your performance. And what that allows us to do is that take that 40% pool, which was market bought by someone, and redistribute that to, let's say, Josh here, whose metrics were better than Chill. And so because of the flywheel, you have built a deflationary network. And if you believe that people are not going to just sell all if you, as a data net owner, you can use those repo emission, the repo you're earning for your performance to either seed your subnet, and the publishers and voters are mining those emissions seeded. And in V2, we're also enabling seeding in any token. So you can actually, if you guys launch like an MCG token tomorrow, and you want people to provide feedback on all the podcasts, you can actually incentivize them on the MCG token. We just take a 20% cut on the emissions, but that will basically be taken right up front, and that goes into the protocol treasury. That's how we make money. We also take 10% from all the publishing fees. We also make money there, and we also and then the network is already kind of being deflationary by the burn mechanism. So there are all these things happening. So that's one thing I wanted to highlight. The other thing I want to highlight is the EVOF. So we came up with this metric to measure data quality. It's a problem that I've dealt with since 2022, where how do you know what is good quality data? The way we do it in the world of AI, not crypto, is you read a data set, do an A/B test really. Train agent A, and measure its performance against, another, like either without the training, or you measure it against another data set. That's how it's done today. With repo, because of this economic feedback mechanism, we came up with a way where you can, the equation is on my personal X if you go there, but you can actually take the total voter volume and the number of people unique voters, and actually you can come up with a metric that can give you a confidence interval of what is the data set quality. And that's actually a big unlock in our opinion, because now you can understand, you can give a signal to a potential agent who's trying to consume your data of what is the data quality before it makes a purchase, right? It's equivalent to like a Google review or like a credit score without someone engaging with you, like a reputation metric that's like kind of novel to Repo Network. So I think those are the two things I wanted to highlight.
Awesome.
Can you just link that where that equation is? I try to look here, but
yeah, just on my X. Yeah, I'll just do that.
So I saw, while you're doing that, I saw that I think it was in February, you guys, like, the relock rate was like outrageous, bro. I'm talking like 70+%. Like, I don't think I've seen any metrics recently I don't know. Is I think I looked on the website. I didn't see anything on the website. Maybe I was looking in the wrong place. But what can you say about, like, some of those stats that you might see that kind of reflect the interest from the user standpoint in actually participating in some of these markets?
Yeah, so it's all on repostats.com. The relocking rate has consistently remained above 50%. I think with the recent PA and then the V2 coming, I think there's like a consistent set of people who are mining repo. They're basically publishing, republishing their content and uploading. There's like a core set of users. But yeah, I think since like the peak of, like, I would say early Jan, there's been a little bit of like slowdown because people are more excited about V2, especially because in V2 you can basically upvote and downvote. So people are super excited about that. So what we've seen is that the ones who are continuing to participate, I think the relocking rate right now is around 60%. Because people were scared of like what's happening with the market and Iran and all those things, so they don't want to lock for long. So what we're actually seeing is people locking for like because the minimum lock is 1 week, so people are locking for 1 week, coming back, mining emissions, and so we're seeing that. But as you can see, like the unique number of stakers and content submission isn't grown a lot in the last a week or so. But I think we see mostly that because of the V2 upcoming launch. But everything else is this is like updated live, verifiable on chain. And we still have like over 946 locks, and these are like all community locks. This number was like I think close to like 1100. I think, but yeah, so people are basically just being like, okay, I want to see what's happening with V2, and I think we believe that a better metric for V2 would be data net level locks. Sorry, like the locks are still happening at the network level, but you will have more like data net level volume. And so I think those are the metrics. We'll actually add that in the analytics tab, which is coming soon right now, if you go to the top. But yeah, all of that will be available. And then I think it will look, it will be very data rich, kind of look like taostats.com, where you will have data net level metrics to assess who's doing, how each data net is doing. And we will have day one revenue for each of the data nets, because the money comes from people gambling into prediction markets, right? I think that's our like main thing here, is that you don't need to wait until you monetize the data set. You can start to make revenue as a data net owner from day one, because people are coming into your data net and paying you the publishing fee, the access fee to participate in your prediction market, just because it's a fun game and experience.
Got it. Wow. Yeah, I guess I was looking at it, was it yesterday or the day before? And I was like, where are the stats? And I'm hunting. I didn't realize I was on the token side and not the network side of the page. So thanks for clearing that up. But no, you guys have been amazing. You're doing a great job. You got big things coming up here in the next couple days. But this has been an amazing catch-up conversation. I mean, I think I have everything that I wanted to ask out. Chat, if you guys have any last questions, let me know. But while they kind of think about that, there, RG, anything that you want to share that we have?
I got one. Pinned to your profiles, you have this repo $1 trillion opportunity. Can you just run through that post?
Sure. Yeah, I think right now one of the main challenges that this post, and I think I actually want to highlight another post which is not by me, but someone who's xScale AI, they posted this. I think these two pieces are really good framework for people to understand how do you value. A lot of people think like, oh, like AI, training data and data pipelines are just like this LARPy business, who are LARPing on, people who are building AI models. But the reality is, like the article that I've written and then this other article I've shared allows investors to get like a framework of how do you value a business like Repo, right? And I think the TLDR comes to that is like, you're basically trying to price disagreement, price experience, price these like intangible things, which is why it's hard. You can just price, data centers because it's electricity, right? If you could actually price neurons, it would be a lot easier to price Repo. And I think that's the TLDR. As we're moving towards a world which is completely AI driven, vertically integrated AI, human feedback, human knowledge, how does that distill and flow into AI is what we're trying to do. So if you look at Sid's profile, Sid is like Xscale AI and all that stuff, right? So I would say that that's the TLDR. We believe that it's a $1 trillion market. Robots will need it. Agents will need it. There's like a whole angle around AI policy evaluations, alignment, AI alignment. When we talk about super intelligence, like there's all these unlocks that happen with Repo's prediction market, because you're bringing economics into the play of training data pipelines. That's the TLDR. And
Maybe
so,
also on this frame of thinking is, you've kind of got a proof of concept out there. You've shown some sort of examples of this working. Have you gotten any outreach from guys like, I guess that's Porter, I believe you said his name was, to interest in what you're doing? Like, has people reached out to offer funding and whatnot to like build this out? Because obviously this seems like a big opportunity. I think I get why this exists, but yeah, just curious
we've
if
already
there's
raised
like
we've already raised like 8 figures. We'll be announcing that in like mid-April through some listings. So
wow,
I think
really?
yeah. So yeah, we made an announcement back in December, I think, but we didn't announce the exact number. But yeah, TLDR, the fund it's a family office called Bolts Capital. You can check them out. Where Repo is on their portfolio list. So yeah, funding is not an issue. I think speed is.
So is this the first time that you're kind of like sharing this at like in
We
general?
shared this. We shared like the structure of the fundraise back in December when things were like really hot. We did a whole post about it. I can link it. I have to just find it. But if you technically go on Repo's main page and go to highlights, it'll show up. But yeah, Bolts Capital came up with a pretty large backing to us. And the way it's structured, it's a line of credit or like financing. So it's actually better because we didn't just sell our equity or a certain amount of treasury at a spot price. We can basically draw down from that line of credit that we have whenever we want. And so if Repo is at 50, we only price like at that, and then basically there's like locks and all that stuff involved. So it's actually all community aligned, and that's a way to prove that Repo is building a tokenized business and commitment to that, compared to other projects who might be building a Web2 product but have a token, but it's not very clear like how value accrues to the token. I think if you deep dive and even spend like 15 minutes with Claude or Grok and our white paper and everything we've pushed on our website, it will become obvious that Repo is building a mechanism where all the value accrues to one token, not subnet tokens, not alpha tokens, just one token. So,
yeah, I think that was pretty clear to me. I first discovered you guys it was later last year, I believe November, December, somewhere around that time. And just from high level, just taking a look at your Twitter page, your website, just reading a little bit into the white paper, I was like, wait a second, hold on. We just discovered something pretty amazing. I'm not sure if I understand it. So I'm like, we got to get them on MCG. We got to like interview them. So that's kind of became the beginning of my Repo journey here. But awesome, man. And can you mention the name of that one more time? I'm actually looking on the website right now.
For the fund or?
Yeah, the fund.
Bolts Capital. I dropped it in the chat. Bolts Capital.
Gotcha.
Yeah.
Gotcha.
Yeah, those guys backed like OG, 0G, and like a bunch of big projects. So yeah, I think they have a family office called White Tiger, like they're based in LA or something. But yeah, really interesting people, experienced folks since 2017. So yeah.
Got it. Sounds good. Well, RG, man, this has been huge. I know you're at the airport, and we'll respect your time here, but thanks so much for joining us. I mean, safe flight and all that good stuff. Keep building. We're excited for what you guys have coming out here, in a few days, but just on a much larger scale, just excited about Repo and its future in general. So appreciate you, and hope you have a good one, bro.
Yeah, thanks, Joe. Thanks, Josh. Ciao.
Yep. See ya.
Take care. Dude, freaking massive. Yo, chat. I don't know if you guys, maybe some of you guys haven't known that I am a big Repo bull. But here's a post just to again recap a little bit some of the high level thoughts that you guys might not be aware of, because this is kind of one of those long term bags that I'm just waiting for the timeline to pick up on. But just to let you know, team includes Filecoin, Uniswap, Polygon, AWS, Base. You know what I'm saying? Angel investors, Meta, Ledger, Apple, backed by Protocol Labs. One of the core contributors to Virtuals is also bullish. At least this was some high level thoughts from last year when I first kind of picked up on this, and I was like, whoa, hold on. Like, I'm not like, when you hear me say like, oh man, no, I think I discovered something huge. No, I literally said that in the post, bro. I'm like, I think I just found a massive project. Like, repo is huge, man. So don't
Can
do
you
your homework.
link that in the chat, and I'll pass that along?
Yeah. Let me link that to you. But like, I know you got like I know some of us are bullish on some other like AI data stuff like CLED and stuff like that. I think I think there's just a question in terms of like tokenomics with CLED, right? There's still like there's still some questions to answer there, but it's a huge project. Like, I mean, they have backing by huge people. They've raised a ton of money. Avi is a Chad. So that's why we're bullish on it. But there is still that component with street and stuff like that we're still trying to get some clarity on. But with the protocol like Repo, why I find it exciting is, look, the robot money dev Lex, he said it the best. He said, look, we are simple tokenomics win. And that's what I like. I like simple setups. Does the team have experience? Yes, it does. Right? Yes, it does. Does the team have, partnerships, backing, etc.? Yes, it does. Is there product market fit? Yes, because the the usage of the platform has actually has been off the charts. And then, what about the future? Is there a good future outlook? There absolutely is, especially when they're backed by this Bolts Capital, Web3 family office. I'm looking to see like what their assets under management, how much assets under management they have. I didn't want to like, um see their portfolio. I didn't want to get too much in the weeds with him on that because I don't know how much he was willing to discuss with us, but that's some pretty deep alpha there for you guys. But
glad I
yeah,
asked there right at the end. That was a good Hail Mary toss question. Just throw it in.
I'm gonna ask Grok real quick. How much AUM does Bolts Capital have? Let's just see what we get. In the meantime, let's check the chat real quick. Repo is a giga good beta this Tau run. Absolutely, man. And I think with Tau running, I think what we'll ultimately see is this sort of shift to AI centric plays, right? And there's always been this. It's been mostly like AI agents. There's always been this curiosity with traders looking for these like AI plays, but it's been mostly AI agents these last few months. But I think kind of going back to our core kind of roots when it comes to crypto centric AI, that's where Tau will put the attention, and I think that's the intersection that Repo sits in. Bolt's Capital here, as far as assets under management, is not publicly disclosed. Bolt's Capital is linked to White Lion Capital, which has over 1 billion in committed capital overall. One source notes that in 2024, the team expanded again into digital asset sector with the launch of Bolt's Capital, allocating over 500 million to it. This suggests Bolt's Capital may operate with several hundred million in allocated committed capital. Individual deals have often been framed as committed investments. Okay, cool. So, I mean, they've been at least funded with $500 million. And depending on when this allocation was made, let me just ask it one more question. If you had to guess, how much would it be right now. Let's just look. You just got to know the questions to ask. I know I misspelled some words, but I'm sure Grok will get it done. 500 600 mil. That's the midpoint guess, but 400 to 800 million, and I'm guessing it's basing it on its previous investments. Public deal flow shows big ticket committed investments. They've announced roughly 180 to 200 million in disclosed commitments. VCs don't announce every deal, and not all capital is deployed immediately. So the total fund size is almost certainly higher than the sum of public deals. Yeah, cool. So awesome. Potentially 400, 800 mil. A king's mentality. What up? Hope you're doing well, bro. Greetings. Always look forward to the greetings each stream. But yeah, dude, Repo is definitely one that I might have to start DCAing at these levels. For context, let's take a look at Repo on the chart. Let's see where it sits, because we've just got some pretty massive information. Looks like we're sitting under 4 mil deep in a buy zone that we marked out way before. So yeah,
that's an OG. That's what we like to call the old OG buy zone.
Yeah, literally. I mean, that's on a pretty high time frame. It's literally like that's what you're gonna get here. But I think as far as assets that I'm bullish on right now, let me just, for the sake of the clip, let me just make a quick list of assets that I'm really bullish on. Let's make it like long term, like not just like these like short term trades, like long term assets that I'll be accumulating. Let's say, until we exceed or go past the bottom here for Bitcoin. So assets I'm bullish on right now. Repo, that's one of them. Of course, we just talked a lot about that, between the team backing, the investment, the big investment that they got from a potentially 400 to 800 million dollar VC fund. Obviously, the team is crazy. It's stacked. They have X Filecoin, Uniswap, Polygon, Base, and others. They're backed by like Apple, Meta, and some and Ledger, and some others as well. So obviously, Repo is a good long term back. That's one. Another one that I'd say that I am really bullish on would be Juno. Juno's really nice. The thesis on this one is simple. It's basically the kind of infrastructure for zero human companies, right? You have an agent that can help you to build out a zero human company, and right now it's approaching a bit of a buy zone, one that we haven't been able to stab at as much as I'd like, because it's only briefly touched it here. But I'd really like a deep buy zone buy on this one here. But that's Juno. Another that I would be really I'd even say ahead of Juno would be Takeover. And this isn't AI, this isn't the current narrative. This is a new DeFi primitive, and it's currently breaking out of a multi-week range ahead of a V2 release, where they plan on where they plan on releasing this sort of like gamified rewards layer for trading fees. They're now going to expand that to other LP positions as well. So essentially, someone that's LPing for any token with volume and trading fees being collected, they can essentially take that LP position, tokenize it through Takeover, and then they can use the fees. They can tokenize the fees by putting it into Takeover. Takeover turns it into a grid with 100 spots. Each spot is claimable to 1% of the total trading fees, and then and users can bid for those trading spots, right? You can buy one tile, you can buy 50 tiles, you can buy all the 100 tiles to claim all the trading fees to that, right? But users will be the ones to kind of bid on that, and a lot of that buying and selling and all that activity accrues to the Takeover protocol, and they've already bought back 10%. So I think it's a good liquidity primitive, has a great future. So I think that's another one that I'd be really bullish on right now. Lobstar, I think is really great. I mean, it's memetics. It fits the Solana culture, and it's it just has all the things that it needs. Within the agentic narrative, memetics, it has a ton of attention. It created this two things. Like, first was the test, had like 20,000 participants. Second was this ritual. Basically, you'd come, sacrifice your tokens, and then it would reward people randomly. And so that had also a ton of activity as well, and it's even interacted it's even interacted and coordinated with real humans, IRL, and paid humans 6 figures up until this point. So that's the thesis there on Lobstar. And I think, if I'm not mistaken, and Top Fumbler, we're definitely going to talk about what's that about
Captcha.
Captcha, yeah, here in a moment. The last thing is a meme coin. Again, I'm probably one of the only guys on MCG that trades meme coins, but that's okay. I'm here for it. So as you can see, what the dog doing.
Shout out to Chill. Wow, this is nicely popping out. I've been watching this for days, and it just kind of was chilling. But this, yeah, what a nice move.
It's given us multiple attempts within this buy zone. When it comes to memes, it's mostly about attention, right? And one thing that I've noticed about what the dog doing is that no matter the price, there's always attention for this token. There's always attention for this token. For whatever reason, the community loves it. So I'm not a person to demonize meme coins or say this or say that because of my personal ideology or my personal bias around memes. I just look at the market. I see what the market is interested in, and I'm positioning based on what the market finds interesting, because ultimately the market controls price, not our thoughts on where the market should be. And as you can see, there's a post just the other day where this is like just another what the dog doing post, right? Just random meme, you might think, but boom, 1.3 million views.
Wow.
It's consistently, some of these videos are consistently getting, this is like the third or fourth video that has gone viral within the last several weeks on what the dog doing. Meanwhile, the price is just kind of meandering around a buy zone that I've marked out for quite some time. So yeah, look, I love this. I love this meme. Apparently the market does too. And a lot of people have been engaging with posts like this. So I'm not going to fade that. I'm not going to fade that. So I think that's really where my positioning right now lies. The last thing that I did forget to mention was Nook. You guys know, and that's just this is just kind of the low cap list, but Nook is also another one that I'm really bullish on. And here's the chart. Chart looks a little rough, not gonna lie. V2 came out, and I believe a lot of people tried to kind of trade the catalyst, but I'm more so a long-term position, because again, you have a great team, clean tokenomics connected to the network effects. That's what I'm looking for. In the case of Nook, it's tokenomics. In the case of Repo, it's tokenomics. In the case of some of the others that I mentioned, it's tokenomics. I just love when, whatever it is, it's connected to demand of the token. Now, for something like a Lobstar and meme coins, it's that connection is more so attention driven. But for these utility projects, I'm looking for something with like great utility, right? Like with something that looks really nice. And I also like Juno as well. We can also include that on the, oh yeah, we talked about Juno already. So there you go. There you have it. That's kind of like 4 or 5 assets right now that I'm really liking. Let's go ahead and break down this Captcha trade. Top Fumbler. So we talked about Captcha a little bit earlier, but I don't mind going through it one more time here. Basically, this is Captcha. This is the chart anyway. Let's actually erase that. Let's go down to the 30-minute, and then let's blow this thing up a little bit. So as you can see, we've kind of retraced a little bit here to the golden pocket, seeing a reaction so far. Captcha is basically this social media that's anti-slop. We talked about it earlier. We showed you the video and everything. And as far as like positioning is concerned, I'm not sure if I'm like super bullish on this. This reminds me of like the friend tech era from last bear market. I feel like everyone is bored. No one knows what to trade. And so, there's some new social media that comes out and people want to play with it because there's nothing else, nothing better to do in the market. I would love to be proven wrong on that. But that's just kind of the thoughts on it right now. But as far as a trade, I'm actually positioning, I'm actually DLLMing, and I'm going to change that name. Let's call it delimming. Man, it's a mouthful, but I'm going to be delimming that this chart. And let me pull up my my edge terminal for delimming.
Just say
boom.
delim.
Delimming. Delim, yeah.
Just delim. I'm doing a delim on this.
Yeah, so Crypto Jones, that is the question I was actually just about to talk a little bit about. So, how do you position yourselves for if you are late to a trade, right? Like maybe you didn't see the top here of CAPTCHA, maybe you didn't see the top here, and maybe you discovered it literally here in the current buy zone. What do you do? How do you position? So there's one of two ways. There's one of two ways to position. Let's go back to the this. Let's not even cover my position. So you can either do a curve, right? And as you can see with the curve, and let me put 0.8 SOL here. As you guys know, I'm starting with 2 SOL and I'm just working my way up with delim. But here's the curve. A lot of people don't use it with delimmers. But again, delimmers, those are traders. Those are LPers. They're not necessarily traders, right? They're looking for volume. They're not necessarily looking for to buy and
Direction.
hold something. Yeah, they're not looking at something with a bullish bias or holding it for the long term. They're not necessarily like asset selection isn't the priority. The priority is where's good volume, where can I farm fees? What I would like to do is introduce good asset selection into delim. So if you're late to a trade, here's how you can get in. You can go in. This is my favorite so far. It's been spot. So I kind of I look at the trade and I say, all right, where's this chart? Where can this chart potentially bottom out? You guys know when there's not a lot of support and resistance to refer to, I'll go with the fibs, right? And I'll see where the 0.786 is. I'll see where the golden pocket is, right? We're right now sitting at the golden pocket level. And we can even just refer back to this chart here. We're sitting at the golden pocket level. It's already showing signs. Typically, I like to look for a cluster of buy and sells. And right now that's here. Let's go down to the 15-minute. You can see that cluster much better. This is where the cluster exists right now. And I'll even just do that so you guys can see it a little better. So this is where the cluster and the cluster of buy and sells exists right now, right within this. Let's make it orange, right within this orange box. And so if I'm looking for a delim position, I need to be able to, and I'm late to it, I need to say, okay, if I'm late, we're probably already close to a bottom, but I'm not sure. So I'd like to set my range to capture things a little bit on the wide side. So if I'm right now, delim, I'm going to set a delim position here. I'm going to make my range at the top, right? This sort of like resistance level. It was a support level before, but it's now resistance here and here, right? And so that's going to be the top of my range. And then at the bottom of my range, I'll just go below the 0.786, right? And I'll just slightly at it or below it, however you feel. And my idea is this will probably just bounce around here for a little bit, right? Ideally, we'd get a pop back up. That's essentially what I would love to happen, but I'm not sure if that actually does. I'm not sure if that actually plays out or not. So I'll set with this. I'll be comfortable in this range, and hopefully the chart can bounce around here. So on the delim side, we already know
you're doing spot as a strategy there.
Yeah, we're gonna do spot as a strategy. Why? Because going back to this chart real quick. Let me just delete this and I'll show you guys why spot. If you're late, you need to actively put your capital to work with a bid ask, which is what most people, most delimmers use. Bid ask, you start low and then you work your way up, right? And then you work your way up to bigger and bigger and bigger and bigger DCA ins, because that's essentially what this is, right? It's all DCA ins. That's all this. That's all delimbing is. That's a great way to think about it. And as price comes down, you get these small DCAs filled. Get these small, and as you go down more, you get bigger DCAs as you go further down in price. That's the bid ask. Now, here's the difference. With spot, your DCAs are now with spot. Let me actually do this real quick and move the chart. With spot, your DCAs are equal all the way down. It's equal size all the way down. Your liquidity is split into even bins, and then your DCA in as you go down is all equal. So you're getting immediate exposure as much as possible. And so if you're late to a trade, you have to first evaluate how late are you. That's the first thing to evaluate. Number one, how late are you? How much further down can this thing possibly go? And without old support and resistance levels, the way for me to know is kind of like this fib level, right? 0.786, perhaps it goes that low. Sometimes it might even go like as low as like 90% from the top. And if we're doing 90%, because that's the normal, 90% is would be like the 0.86 level on a fib. So maybe I can include that as well. But my personal reference is the golden pocket here, the 618, and the 0.786 for the key levels. That's how I evaluate downside, right? So how late are you? If you're super late, then you'd probably use the curve. But if you're just a little bit late, then I'm going to use the spot to get even DCAs all the way down. I'll set a range a little above price, a lot below price, and just get even DCAs going down into the range. And as this chops around, I just farm fees off of all of that chop, right? So that's the first. If you're a little bit late, let's go with spot. If you're a bit late, then you would have to do what's called curve. A lot of people don't do curve because that means you're DCAing more at current price. I want you to pay attention to this section over here. As you can see, spot, this blue is all in spot. This blue is all even distribution of your liquidity in the range. So it's all even. With curve, you're DCAing more at current price and less as price trends down. And then your bid ask, you're DCAing less at current price and more as and bigger DCAs as price goes down. So you kind of have to evaluate how late are you. If you're really late, you think we're probably close to a bottom. I like to do spot. I don't think I'm ever going to use curve, or maybe I will at some point, but at least not at this stage. I'm not going to use it. I like to do spot because now it's just even DCAs across the board. And if it only goes a little bit into my range, at least I still get a decent chunk of my liquidity put to work on the chart. So my two favorites right now are bid ask. If you're able to catch the top, you just DCA down minus 90% and you collect fees from that entire range. That's the sweet spot, is being able to literally start your bid ask here and DCA minus 90% down, and literally off all this action, you are farming fees off all of that action, right? And I'm learning alongside you guys. So I'm just kind of telling you guys like my current understanding based on what I've been doing. And so that's what you see here, like, is the bid ask. That's the kind of strategy there. That's a sweet spot. But if you're late, you can always use the spot DCA. That still helps you to farm fees. And as you can see, that's exactly what I did. So I opened a position on CAPTCHA. I did all of the kind of like TA work to basically I did all the TA work here to assess all of the levels. I marked out my range, and that's kind of where I'm going to operate, right? That's where I'm going to operate. And as you can see, it's starting to bounce around in this range and like establish this as like a potential bottom. Darth Infernal. I think one of the first questions to ask is whether you're bullish or bearish on the token. No, because if you're going for one-sided spot with Sol, then it essentially means you want to DCA on the token because you're bullish, right? Not necessarily. Again, D-limmers, they're not operating with bullish, bearish bias. What they're saying is, where can we farm the most volume? Where's the price going to chop around the most? And so they set a range for where that price chops around. So here, I don't necessarily need to be, with my current position, I don't necessarily need to be bullish on this token in order for me to make money. As long as the token chops around in this range here, boom, like I'm good. And any of the fees that I farm, as you can see with the claimable fees, you actually get fees within the token. So if I farm a decent amount of fees off this, I can actually get a passive investment into, or a passive position into this token. And I don't really need to do anything else. So it is a question to ask, Darth Infernal. It is a question that you want to ask, but it doesn't have to be the first one. All you really need is for price to be able to chop around, for volume to sustain. And for volume to sustain, sometimes it doesn't mean that it's just, gonna go back to new all-time highs. It just needs to go back to the top of your range for it to be a successful trade, right? So as you can see right now, price literally is just coming out of my range on this capture token. What I might do here is I actually might withdraw liquidity, because I think this volume is going to sustain for a while. So let's do this live on stream. 2:23. We'll try to close the stream out here in a little bit. But let's do this real quick. It's out of my range. And so what I'm going to do is I'm going to withdraw liquidity. Oh, wait, it's back in my range now. This is the live reaction. I don't know this DLM strategy like through and through. So I'm going to be a little bit nervous live, but I think I'm going to do this. I think what I'm going to do is withdraw liquidity here. And let me just confirm the transaction. So I'm going to withdraw liquidity because price looks like it wants to peak out of my range. And so now that I've farmed some fees already, let me claim my fees as well. Again, I'm doing this all live. So let me just make sure I'm doing it all correctly. Boom. So claim some fees. And now I'm going to rebid. I'm going to do a bid ask flip. And so I'm going to put in all of my tokens, and I'm going to put in 0.8 Sol. And let's do this bid ask flip. And I hope I'm doing this right. I'm pretty sure I am. But I'm going to put now my range to the top. I think this can go back to all-time highs, but now I get to farm fees on everything. But let's see here. Let's see. Let's autofill, I guess. There we go. Autofill. 612. Okay, yeah, let's autofill, I guess. Hold on. Let me do something real quick. Let's do this one more time. Let's do 0.8 Sol. Insufficient captcha. Okay, let's just do the captcha that I have. Oh, so okay, I just found that out. So I can't. So I would basically have to sell all the captcha that I have. So I'll swap it back into Sol. And
is that the captcha that you earn from fees?
Yes. So I earn captcha from fees, and I earn Sol from fees as well. So now that I don't have, okay, let's try swapping one more time, I guess. I thought I just swapped it.
Yeah, it said top left, you got, I think, some error. There you go.
There you go. Okay, so complete it now. So I think what I'm trying to do here is the bid ask flip into the sell into the sell side, right? So um let's see. Let's do point 0.8 soul again. There we go. Insufficient balance. Let's not do an autofill. Let's not do an autofill. Let's just do current price down. But I want to sell on I don't want to DCA down. I want to sell on the way up. That's what I want to do. Am I getting something off here? Yeah, this is the bid ask flip here. I'm pretty sure. Yeah. This is the bid ask flip here. There we go. I think. Yeah. So let's do 0.8. Let's do point 0.8 soul, and it will set my range here. I wonder why my range isn't showing up on the chart. Let's just see. Let's just see how this works. And I would even set the max. Oh, let me see. I'm a
Is
little.
it that low high? No, that's the chart range, overall chart range.
Yeah, I think it's not. I think it's not. It's not calculating the current price. I think that's what it is. I think it's not calculating the current price correctly.
Try refreshing. Do you think that might help?
Oh, you're okay. So I can't do a bid ask flip with Sol. I would have to do it with the token. Yeah, you're right,
Okay.
Crypto Jones. You're right, Crypto Jones. So
we're learning live here, guys.
We're learning live. We're learning live. So essentially, what I'll do is let's do one soul. Let's do one soul into captcha. So I'll sell one soul into captcha. And if I'm bullish on this token, now that it's looking like it wants to peak above the range that I established, I go to, and I think I do the same thing. I do 100% of my captcha. I do spot, and I just sell on the way up. However, I'm not understanding why. Number one, I'm not seeing I usually do it based on the range box that's on the Edge platform. Let me just refresh real quick and see if I can get that. Okay, perfect. Perfect. This is what we want. Okay. So I do my full range. This is what I want here. Perfect. I don't really mess with this down here. I think the box here on the chart is much, much better. So now I just do spot and I just farm fees in this range on the way up. And I will create position. And then boom. Perfect. So now I'll farm fees inside this entire range. And I believe, if I'm not mistaken, I have to close this one out from the last trade. Because that's the other thing, like I'm learning is if you're late, why did my range go all the way up there? Why did my range go all the way up there? Okay, so we're learning here. This is probably my fourth DLIM trade. So I'm still learning, but I think the thesis is playing out here. Essentially you have upside for this token, and I want to be able to farm fees. If it is sold, then it has to be less than or equal to price. I see. But that's the thing, Darth. It wasn't price. Like I actually swapped into the token, and I thought because it's in the token, I can do it on any part of the chart. So maybe not. Maybe next time. Maybe next time I just have to. Maybe I have to do that a little differently. But
a little bit more
way,
practice, and then we'll do it more live.
Yeah, a little bit more practice, and we'll do it live. But that's essentially that's the thought process that I'm thinking about when I go into some of these trades is I'm just trying to identify what's a range where price can sit in between. And then if something is turning bullish, how am I positioning? If the price is low already, then I can just buy the token and sell out as it goes higher. But I just found out that I can't go lower than current price in the range. So I think that is a little bit of the thesis that that was a part of the reason for the trade. So I'll work that out a little bit and I'll practice a little bit more. I'll give you guys some updates as things develop. But right now, still flat, still just at 2 SOL. So I'll let you guys know how things go on the wizard trade. I actually went below my range and I closed the trade, but because I farmed enough fees, that saved me from the downside in the token. So farming the fees actually kind of helped me to limit my downside in that case. So yeah, but sounds good. I'll let you guys know how things go. Anything else you guys want to discuss before we close the stream down? There's a few things. I think we discussed pretty much everything that I had. Josh, anything that you had at all?
No, honestly, just looking at the charts. What did Perp end up doing? I just saw that was been a wild back and forth.
Man.
Keith, man, honestly, shout out to you for having that buy zone on Keith. That ended up being like spot on.
Keith was solid. Let's see here. I don't know. I don't think much happened for that other trade that you were talking about. What was that trade that you just mentioned? That
Keith.
ticker? Not Keith, the one before.
Oh gosh.
Gosh.
I can't.
I'm cooked. My brain
I'm
is
cooked, man. I'm honestly
my brain is cooked. That's fine. We don't have to absolutely do it today. But yeah, I think that's pretty much it for me in the trade setups. We talked about a lot today. I mean, we went through Robot Money, the big mine there, some great clips from that interview and some great information that we got from that dev. I guess we didn't talk about this, but Juno just came out with simulation as a service. This kind of attached along with with Lex, the creator of Robot Money. This kind of went along with his views on zero human companies. So we kind of see a little bit of confluence with the thesis going on between Tom and between the Robot Money creator. So we talked about that. We talked a lot about Repo, some great updates there, some high level thoughts and what they're doing, exciting stuff that they had and exciting things that they were working on. We even talked about all the setups today, between DLM setups. We talked about others as well, but that's the stream today. Hopefully you guys really enjoyed it. Tomorrow on stream, I believe we don't have a tweet out about this just yet. We do have X stocks tomorrow. That's going to be a pretty huge conversation. And then we have Avo on as well. Avo on Solana, one of those OG ICM Believe tokens that we've been covering since pretty much it launched back last summer. Yeah, keep saying capture is not a buy. Yeah, it might not be a buy for him, but it still might pump. You know what I mean? Like if this guy comes out with any updates or there's this is in the news, right? This is in the news. I mean, look, bang, in the buy zone, in the range, or not the buy zone, in the DLM range. It wants to peak back up.
This guy already made $10 on it.
You know what I mean? I'm already up 10% on the
$10
the trade.
Oh yeah, 8%. Wow, look at you, just cooking.
So yeah, look, I understand that it might not be a buy, but again, with DLM, it's different. It's not just about a bullish bias. It's about where's the volume at? Where's the volume going to be, right? So that's something to keep in mind there. Friday, we have Luxo on. Tomorrow, Thursday, is also going to be the EZA demo day. We have a post coming out about that today as well.
Yep.
So there's going to be a huge stream tomorrow. I would appreciate your support on that, guys, as you guys support us every day. But Follow at MCG Live to get updated on everything related to MCG, and we're working on some other stuff as well. So
yeah, there'll
stay
be
locked in.
keep a note. There will be a new X account that's specifically for stream notes. So you won't see the stream notes if you follow the at MCG Live account anymore. You'll see them in the replies still, but it'll be at MCG Alpha, which is the note taking account. So just keep that in mind. I don't have the account posted. I'll let you guys know when we do post it, and I'll be very clear for a number of weeks where the notes are being written, just in case you use those to, yeah.
Yo, Crypto Jones, real quick, chill. You better supply the soul side of that DLMM trade. Supply the soul side, like add liquidity. Is that what you mean? Like add liquidity right here? Why? Why should I? Let me know. Up 15% now, by the way. We're out here learning on stream, printing on stream. I mean, it's a humble 15%, but
the humble, a humble, that's lunch money right here.
You know what I mean? Like, let me see something real quick. Yeah, it's just a humble 15%. It's just a humble 15%. It is what it is. But look, it's still something. But what? Oh, you remember that meme? It's not much, but it's honest work. Type that's the kind of thing. But Crypto Jones, DM me, bro. Let me know what you mean by that, because I want to make sure there's nothing that I'm missing with this trade. That's actually my first bid ask flip on DLM. I've done the spot side.
So maybe like just walking through that trade, I don't know if you can pull it the dashboard back up, but like I think what he said is you withdraw the tokens that you've earned, so that $2 of captcha tokens or whatever, and then you build a new position with that specifically, with those tokens specifically.
So what I did.
And then what you did instead is you bought one soul worth of tokens. So right now you're technically you're long, right? And you're basically DLMing out of that token as it goes up. Is that correct?
I guess. I think. I actually have a session with
chat.
Crime.
We'll get it. We need another crime session. I might join you on this one, to be honest.
Yeah, I have a session with Crime literally today. Or today, tomorrow? No, maybe tomorrow. But I have a session with Crime so we can kind of like go to the next level. I've just had the introduction to the core, like the DLM course, like, and I'm already, because I'm kind of familiar with trading and protocols and some of the jargon, like I've been able to kind of put other things together. But there's still like a next level, obviously, that I need to get to, but I think directionally I'm right. Like, I hit this range. That was my range going down, or it might have even been as low as this. That was the range going down, right? I saw it starting to peak above the range. So I said, all right, let me flip that and get a new range. And now it's back in that. So I think I'm doing it the right way. You're saying supply the soul side to the liquidity. I'm trying to wonder, like, what do you mean? What do you mean by that? What do you mean by that? But yeah, DM me, Crypto Jones. But it seems like directionally I'm good with the thesis. There's just some like specifics that I might not be cued in on. But for a first bid ask flip to be up, 15%, not bad.
Live on stream, let's go.
Live on stream, boys. Shoot, I should close this trade out just to make it like, all right,
close
boom,
it.
15% on stream. But no, I think this is gonna go higher. So I'm gonna
all right.
I'm gonna keep it. I'm gonna keep it. But all right, boys.
That was a 15.
Yes. I could close it out right now and 15% it, but it's like a 2-soul portfolio. So I'm gonna go max. I'm gonna let it run. All right, boys. But great job on stream. Great job today. Appreciate you guys. Love and support. Follow us at MCG Live. See you guys tomorrow for the Easy A demo day. Deuces.